Good morning, good afternoon, and good evening, everyone. My name is Tim Stout. Today is Wednesday, June 14, and we're going to go through the price action today. Try to find some good trades, and in the process, hoping to give you some valuable tips and things that I look at. Today is FOMC day, so at around 8 p.m., 2 p.m. Eastern, FOMC release with a press conference is today, so that is double the fun. Usually that results in an initial move, a counter move, and then as the press conference goes on and people start blurring out weird comments, price reacts to whatever's happening there. Usually price starts to become neutral right before an important release. And we've seen a big bull trend over the past few days. So the question is, how neutral are we after such a big climax bull run up to the current levels? There is a famous saying on Wall Street that buy the rumor, sell the fact. And so even if we would get a large bull move after today's announcement, that could actually become the top over the next few days. If we would get a big sell-off after the FOMC announcement, it could actually go a little bit deeper because we've left behind a lot of gaps on the daily chart that I'm thinking we're gonna fill. So interesting today to see what's gonna happen. We have Rose coming after my shift, and I think she will be there throughout the close, so that would be an awesome, nice commentary to have during FOMC. As usual, you don't have to trade, right? So if anything, just enjoy price action, and if your account cannot withstand the risk that comes with the trades, or if things are unclear and moving fast, sometimes better to just stay out and see if you would be able to find good trades in those releases. So yesterday was a trading range day. I'll come to yesterday earlier, but I want to start with an overview over the little bit more longer time frames. So let's get to the monthly chart. Now, I've been saying since I came on in November, I think November was my first month, I've been saying that October was so promising. Let me get my data box here. October last year was so promising that would at least get a measured move up. And on the September contracts that we're trading now, that measured move up will be 43.75.75. And we obviously touched that yesterday or the day before. And so that was the target, minimum target for any bull that bought the October close, right? So one tick below that bar to the October close. So the October close there, measured move up. If you measure that exactly, not like so loose as I do it now, you'll get to 43.75.75. I measure these targets and I change these targets every time the contract updates. So now that we're in September, I have put this up, I have put that target up. This gap is of course now higher. The channel, all of the values in the channel are higher now, so we're actually looking at more like this. And we're now targeting the August high. Now the August high on ETH chart is on this contract 44.56.50, and so we're about 30 points away from it. But that doesn't say that we're going to hit it today. Often magnets like that are very well, they behave as magnets, but also they behave as profit points. Some bulls that have windfall profits, maybe from the October close or lower, they would want to take profits maybe before we get there. So sometimes when there's an obvious magnet, an obvious target that we go through, right before it, you're going to get a deep pullback, and then we'll hit the target on second attempt. So don't know what's going to happen there. The monthly candle for May was a doji. It went below April and it reversed up. Was a good signal bar for June, but I think it's in the context of the trading range. So those gaps to the May high, to the April high, they look like, I think that they're going to close in July, August, September timeframe. So we might actually go above the August high, double top with the August high, and then go sideways to down. One hour on March also looks promising. That will be to 44.88 area, around there. I still think that we're in the making of a double top or a lower high major trend reversal before coming down to this side of the channel, which would be around last year's low at this moment, a little bit more. So that could be the low of November 2020, bounce there, but we are going to touch at some point, of course, this trend line. We can touch this trend line by just going sideways endlessly. We can even touch the trend line by going up. As long as we go up slower than the trend line goes up, we're going to hit it at some point. We had a strong bounce off of it, so it will function as support for some while, but ultimately I'm expecting a dump and a touch of the other side of the channel. Weekly, we are climaxing up, so the week 11 range here had a measured move up, and that's where we almost are. So this high to the week 12 low and then upwards. I can do it exactly for you guys. That would be 3883. Let's set it. So 3883 to the high is 4160.75. So that comes to 44.38, right? So that's 20 points up from where we are currently. It looks that we're going to hit that target. That would be the February, the August high. So that August high, 44.56.50. Okay. So because we're so close to it, let's actually put that already on our charts. Why doesn't it allow me to draw? Yeah, there we go. So 44.56.50. There. Let's copy and paste that on our RTH. There we have it. And that is August high. But on the weekly chart, we are also in the trading range. So what do I expect? Well, there's one gap here to the upside. So the 45.0575 is a gap. I'm expecting that to probably be closed. And then there's gaps more on the downside. So this could well be some climax and then we'll reverse down. I'm pretty sure that we're going to come back here, 42.66.50, close these gaps. But often gaps like this close when we go a measured move up first. So we could be we could go above the August high, get a double top, and then sell off, close all of these gaps. There is one more, this one that got closed, the highest gap that's open is here at 42.66.50. And if you look at what happened since December 2021, all of the weekly gaps have been closing. And so this is not really any runaway gap. This is more of an open gap that will still come down and close. But sideways on the weekly chart, we're getting high. So bulls are starting to look for points to take profit or indications that we're going to take profit. This was a big week. This was a small week. This is now beginning to become a big week. And so it's sort of a two legs, and you might even see this leg as the first leg. So leg one, leg two, leg three. It could be a form of a wedge top, wedge double top maybe, and then sell off. From here, could we go directly to an all-time high? I don't think so. I think over these past 5 weeks, we have been very climactic. The last time we had 5 bull bars in a row was actually a long time ago, right? So for that, you probably need to go here to 2021, beginning of 2021, and here, the end of 2021, where we had solid 5 bull bars. Right now, we're at 5 bull bars, but the week hasn't closed. We could still become a bear bar this week. The 5 bull bars seems to be, if you look at the history, a little bit the maximum of what you could get in general. So chances are that if this week closes as a bull bar, next week will close as a bear bar. Daily chart, we have some type of a channel. We started some type of a channel here, spike and then channel up. Depends on how you draw the channel. You can draw the channel like this, you can draw the channel like this, or draw the channel like this. But in any case, we're escaping above that channel, and that would set up a measured move and then come back to the other side of the channel. Okay. Strong bull market, strong bull trend on the daily chart. We're leaving behind gaps. This pullback didn't even come back into this high, where this new high came back into its high, this high came back into its high, this high didn't come back into the previous range, and it's now accelerating upward. Right? So we have an acceleration on the bull trend on the daily chart. It is becoming parabolic. If you see that this is not like nice in a channel, it's becoming parabolic. You can also see that by the moving average. And so we're forming some sort of parabolic buy climax that can last longer than you think, right? So if you just start deciding to short or buy puts or whatever now, well, this can go on longer than you'd like to. This could go very steep and very much up. Ultimately, it will stop. The music will stop. People will find a chair, and a lot of bulls will be very quick to exit, but it can go on a lot longer. So don't take shorts just because you think things are climactic. Yes, things are climactic, but that doesn't mean a short. Okay, so if you draw the channel like this, you could say, well, I'm expecting a measured move up the channel. So all roads sort of lead to the August high. But because that is a very evident target, it might not be reached on the first time. 60-minute chart. So we had a strong acceleration on yesterday. So, but we had a bear bar follow through and then a bull bar follow through. So could this be the measured move that we ran up to? Well, ultimately it was, right? So ultimately this was the measured move that we got at the end of yesterday's close. But it's still very much a channel type. Like this is much more a spike, and this is much more a channel. So we had a strong up move this morning, but now we're sort of reversing down in a wedge shape. But we're hanging above the moving average on the 60-minute chart, and we are going higher most probably. Although this is much more sideways than up lately, but there are definitely going to be buyers below buying this upward. Good. Yesterday was a trading range day. Again, a gap that we didn't close. So we had a gap. We closed the gaps here. We closed the gaps here. And yesterday's range, we gapped up and we didn't close the gap. Could be that this is a measuring gap. More likely, this is an exhausting gap, and we're going to come down here to close that gap. The bears tried to close the gap, but they failed on a wedge pullback attempt. Bulls bought that, and we ultimately reversed up to a new high, but we sort of went sideways. And what could a sideways move be? A sideways move could be a final flag that if we break above and far above this range, that could be the final flag of the bull trend on the daily chart, and then we could go sideways to down from there, and then close these gaps here. Okay. So Monday's high is going to be interesting because it left a gap. And again, if you look at the daily chart, so here, all of these gaps have been closing pretty much all the time. So there's gaps now here, there's gaps now here, and we're going parabolic up. So if you look at this as a trading range, and the first breakout, the second breakout, maybe this is the trading range, fine. Then also there, we are coming close to a measured move. Now, if you're in a trading range and you get a measured move the size of the trading range and you haven't had the pullback test yet, then the reversal from around the measured move can come back and then close the gaps at the breakout point. There are sellers at breakout points that will scale in higher and that are pretty much guaranteed that they'll make money if they sell more at a measured move, at a measured move up and then more on a reversal. So yesterday's bar one, break above a strong bull trend. This went already parabolic. This was a breakout above it, so it was probably not going to be the low of the day, but bulls got a good risk reward on that. Right? You guys know that I'm measuring on the market open who's making money. So one tick below the bar to the close of the bar. They got one-time risk reward. They didn't get their two-time risk reward, and so the bulls were taking a scalp target, right? A one-time risk reward is a scalp target. So they were taking that, and that means that we're probably going to go below that signal bar. Some bulls still had a position on. They got spooked by the bar 4, and they exited here at bar 6. People that bought the close of 2, traders that bought the close of 1, they might have bought more at the 4 low and then get out break even. Bar 6 didn't even allow the bar 2 close bulls to get out break even, right? So they had to buy more below bar 2 to get out break even. Okay, so how does that work? Well, you buy the close of 2 because you think, oh, by the close, you buy more at the low of 2, and then here in the middle, you get out break even. Let's say you bought the close of 3 and you did the same thing. So now you're buying the close of 3, you're buying below 3, and you want to get out break even. Well, you couldn't, right? So what you had to do is you would have to buy a measured move down and then try to get out break even. And that is what worked, right? So bar 14 gave you the chance to get out break even. Bar 7, so leg up, 1, 2, 3 legs. So sort of a wedge top at the open. You could have sold the 4 close. Selling below 3 was tricky, but you could have sold the 4 close. You could have sold the low of 3 during 6. So when it went back up and you forgot to sell there, you could have sold there. Traders were looking for 2 times risk reward then on that bar 4 because it was not very likely. And so if low probability, then you need 2 times risk reward to offset the low probability. And so they got 2R on selling the 4 close. Alternatively, bar 5 was a pullback from bar 4 breakout. You could sell below 5. Bar 7 is a pullback, but also an inside bar, so you could sell below it. You can also buy below it and scale in, because we're going to go back to that inside bar. Bar 8 was interesting because it also allowed the bears to get 1 risk reward. So what happens here, people that sold the close of 8, during 9, they didn't get their target, right? So they missed it by a tick. And so they tried again, and on bar 10, they got their risk reward, okay? Now again, if bears are only taking a 1R profit, similar to like bar 1, but they only took a 1R profit, then chances are high that we're going to go above that bar. So we went above bar 8 there, okay? So the bulls took over the initiative here. This was a stop, so they might have sold more. If you sold the 9 close, you sell more above the 9 high, and you get out break even, or you get out break even on selling the close of 9. But bulls clearly took over during bar 13. And so what they wanted was at least a measured move of 9 and 10. So that is 44.16. Some wanted to have a measured move the size of 8, 9, and 10, and that was too far. And so you had a wedge move up, little inside bar there, again in the trading range. Inside bar is a triangle, so sellers above and buyers below, scaling in lower. And then here, the higher low fill. So you have a bull run, a pullback, a second one, and a third one, and then sellers got to below the 16 low, and so effectively this mini bull trend was over. One more time to then get out. Bulls actually got a little bit more this time, but bears were definitely selling below 16, selling at 17 high, selling more a measured move up. So that would be exactly here. So they were selling more here, and then they make a profit on all of their entries, including the one that we got to 1 tick below 16. 31, double bottom, great bull signal bar after a new high. And so you're expecting to make at least 2 times risk reward on that bar. Actual risk, so that was about there. Good trade, probably the best trade of the day, the easiest trade of the day. If you see that double bottom, then 32 close, or even buying above 31. The 2 legs down was a brilliant buy. Some trading range days, they also test the open. So the open was tested here and here. Bears didn't get any follow through on getting the day to close as a bear bar. So we closed around the mid range of the open and the high. So that is here, a little bit above the middle of between the open and the high. So the high was important because we tested that 3 times once, and we made new highs every time. The open was important because we tested that 3 times, and so you would know that if the high is important and the open is important, that the price in between it is also important. Okay? So what happened overnight? Well, overnight we went up a little bit. We came down a little bit. The DAX this morning had a nice bull trend and is currently sideways in a trading range. Let me see. Yeah, so that left gaps behind, that's now coming down a little bit in a wedge shape. So the continuous chart, so the ETH is doing the same. So we have this big up at European Open, and then we have a little bit of a wedge pullback at the moment. And we'll see if we're gonna see a new high today. Again, so today FOMC day, so what could happen? Well, probably we get a little bit tame price action right until 2 p.m. An hour before, typically price can die out completely, right? So you could find yourself in a very tight trading range, which is not an ideal environment to have a position on. And then 2 p.m. Releases the news, and I think 2:30 p.m. starts that press conference. And so on the press conference, FOMC events, you get more price action, because you get the first initial response and then how traders react to that, and then at 2:30 you get traders reacting to any weird stuff FOMC members say. Okay, so and again, I think Rose will be there to guide you through that spectacle. But let's see what happens at the open first. So we've got about 5 minutes to the open. Where are we on price? So we are at the neighborhood of 44.19. That is around, not too far from the close of yesterday. Let me draw in already the high and the low of Globex. Why do we do that? Well, 80% of all days go above or below the Globex high and low. And so knowing where that is helps you to see if there's a target. Let's say the Globex high would be here and you see a big bull bar here, you're thinking, wow, that's probably going to go up to the Globex high. So sometimes Globex high and low helps you to increase your profit by going and holding on to those targets. 44.28, so 44.28 there, and 44.13. There. Oh. Okay, so I don't like these big lines, so I like to have small lines. If the range is very small on Globex, and it obviously is, there's also an increased chance that we're going and above and below the Globex high and the Globex low. Let me put that here. And then as you know, but for people that are new, so on the left here, I have my hourly chart, and then I have my 15-minute chart, which I use mainly for setting targets and for measuring higher time frames. Higher time frames give me targets that I can use on the lower time frames to get a heavily favorably skewed risk reward. So that is the idea of using big targets from big time frames on a 5-minute chart. So there was a gap to Monday. I think there was another gap Did we gap somewhere? Yeah, on the daily chart we gapped. This one, exactly. It was on the old contract, it was 40.46, but this high from the 9th hasn't closed yet, so we'll have to see. So we have two gaps actually that we're looking at, 43.90 and 43.70. Yes, but this high from the 9th hasn't closed yet, so we'll have to see. So we have two gaps actually that we're looking at, 43.90 and 43.70. Okay, just getting ready for the open, and I think I have all of my order stuff in place. Yeah, okay. It's going to look like that we're going to go below this bar. So usually you see me measure a bar like this and thinking, okay, so what will it do if we go a measured move up from there, 44.35? But it looks with the current price action that will hit the low of that bar. So 44.15, I'll be looking to see at the open if we're going to see 44.15. What that means is that there is a chance that you could actually go a measured move below, right? 44.01, that could be a target. Since this was a trading range, there's a gap here to the 43.94, and that gap might have to close. So there's an increased chance that we're going to go a measured move down. But since this is so strong, and since we have always bounced from the moving average, that is less probable than you might think because of that strong support there. But 44.15 looks like we're going to hit 44.15 very soon. This, if yesterday was a trading range, expect gap to close. Yesterday above 64 has a gap, 44.0825, 0825. We just hit the 15. Okay, so on the hourly bar, we just went below the hourly bar, one tick, 3 ticks. We probably also need to hit the 1375. And that is on the hourly chart, we went below that bull bar on the with the 14 low ones, and that means that we're most likely going to go below it twice to see what's there. So that's 1375. See if we can get a new high on this bar. Right now it's more of a trading range, so we went down, we went up, but we haven't gone up higher than the open, because this has always been a bear bar until now, so 4.5 minutes of bear bar. But if we can get a bull bar and even a new high, then we had a big down, big up, at least on that small time frame. And so more likely a trading range in this range than a trend. Okay, so we have a bull body, but we also only have 16 seconds left. So everybody is hoping that, bulls will hope that this is a bull body, bears will hope it's a bear body. No, it's a bear body, but what do bears like about this body? Only that, right? Didn't close on the flow, didn't break out of anything. If anything, like the breakout into this range and down failed. And so this looks to be a trading range. If you get a breakout on any side of the trading range, then you get a measured move the size of the trading range. And so that's 4407 on one side, and that's 4427.25 on the other side. Now, most breakouts of trading ranges fail, so buying above bar 1 is not a good plan, and selling below bar 1 is also not a good plan, right? If you get a breakout, you're expecting those ranges to be hit. We're right at the moving average, nobody is stuck yet. And so better to wait. And this will probably be one of those days where waiting for a good 6 bars is giving us more information. Looks to be a trading range. Bar 1 was definitely a trading range. We still held the high, so we didn't go into a new high during those 5 minutes. So it's either a bear trend or a trading range, but it looks to be a trading range. There's absolutely no urgency here. Bar 2 has spent all of its time within bar 1, so it looks to be a dead calm opening. There's obviously a lot of news coming out later today, so people want to know how everybody's positioned. I think on the hourly chart, so we went below this bull bar once, now we went below it twice, and bulls are buying it. So we don't know yet, but we could well be looking at 21.75 as a target, which is yesterday's high, and then a breakout of the range. So if that is the range of the 21.75 was, what was it? Yesterday's bar 52, and then 62 is the low, and so 44.40.75 becomes a breakout target if we can break on the above the 52 high. Again, there's no urgency. Bar 2 is staying inside of bar 1. So it must be a trading range and a triangle on some lower time frame. And it's going to close as an inside bar. So we have outside, inside, probably scalpers or above 2, probably scalpers below 2. But you don't know how much you have to scale in, right? We can go 20 points above and then come down to test the 2 high, or just 1 point. So for us retail traders, very difficult to scalp with saying like a point higher and then 6 points higher, maybe 10 points higher, knowing that we're going to come down to the 2 high. If you have deep pockets, that's a good scalp. But you can see that we went a point above it. So bears are trying to go for a point, maybe 2, maybe 5, before we come back to the 2 high. And so they just got 1.5 points. That's all they got selling above 2. Double top now, so there could be bears trapping bulls now. Some bulls might have bought above 2 and held. It would have been better if we went above 1 and then sell off, then there's more traders trapped. Some traders, not all traders are buying above 2 because it's an inside bar, but there's more traders buying the high of 1, hoping for a measured move up. And so if that happens and then if that fails, then you can get a stronger move down, right? In this situation, I don't think, even if we go down now, there's a lot of trap traders. And a lot of trap traders are fuel to a move. So anywhere you have a situation where there's traders trapped and you go into the right direction, trap traders and entry traders both will fuel the move into a rapid acceleration. But there's nobody trapped here. There's also nobody trapped from yesterday. So that usually fuels a move on the open if there's traders trapped from yesterday, but there's nobody trapped. So we're neutral. So why do I look at the 52 high? Well, on the hourly chart, the 52 high is the high of that bear bar. Okay? Now this is all a bull trend on the hourly chart. This is a pullback. The pullback ends at the top of that bear bar. So if we can take out the high of that bear bar, then all of this range, the high of that one to the low of this one, becomes a measured move target up. And so this range, this bear bar and that bull bar following it is this range, the 52 high to the 62 low. Okay? So if we take that out, this becomes the range for the measured move. And that would be, did I measure it exactly, 250 to 21.75? Yeah, that would be 44.41. It doesn't have to be. It could like go above it, fail, and come down, but then usually it will go above it again. So if it doesn't break out and go to 44.41, we could buy more lower, and then when it comes back again, we can get out there. So that is what happens for the bears. So the bears got one tick below this bull bar, 44.14, and when we raised up, we got below that bull bar again, 13.75, actually here, and the bears scaled out. Right? So this is good. It looks like a breakout of the bar 1 range. So 27.25 is the target, and then Globex high is the target. But we need bar 4 to actually give us confirmation. So the 1 hour range of bar 3 is also 44.28. So 44.28 looks to be a nice and good target. Now, if you paid attention during bar 1, I talked about this, right? So bar 1 went immediately down, took a long time here, and then reversed up and ultimately closed down. So this was a bear bar for the longest time. It was a bull bar for some time and then closed as a bear bar. So clearly in bar 1, we went down, up, and down. So this was clearly a trading range. So if 3 is a breakout of that trading range, bar 1, and 4 is follow through, then we're going to go a measured move up the size of bar 1 minimum, right? Because it's a trading range. If you break out of the trading range, you're going to get a measured move up. And so that's why I'm 27.25. Then if bar 3 sets up a range that is nicely for 2R gives us 44.28, 1 hour gives us 24.50. I don't take anything off until we get to at least this, but hopefully that, right? So I'm wondering what's going to happen when we're around these bars. Maybe it shoots straight up to 44.41 and I'll take profit there. But I'm having these levels here and I see how price reacts there to see if I need to take profits or not. Now, if this bar fails, it's obviously a failed breakout above the trading range, but this trading range is small, and this is already a big breakout above that trading range, so I'm fairly confident that we're going to go up to that 27.25. Now, I do have to check if my connection is still on because price is silent. So if anything, anyone can just throw in 1,000 contracts, then I'll get to my target a little quicker. That would be nice. I don't know if 1,000 contracts actually move the ES. Maybe let's throw in 10,000 just to be sure. Okay, so now that nothing happens, let's go over that in detail indeed. So let me just copy this into a new temporary. So you have bar 1, okay? So bar 1, if you followed how bar 1 set up, it went down immediately. Like this was the high for some time. Like I think it dipped up a couple of ticks and then it went down. It was down here for a long time, and then maybe 2 minutes, and then it went up. At some point in the 4th minute or 3rd minute, this was a bull bar, and then it closed as a bear bar. So what does that tell you about the behavior in bar 1? Down, up, down, trading range. Bar 1 was a trading range. Bar 3, and I said this bar is going to set up a move in either direction, because either we're going to break above the trading range up, going to break above the trading range down. That's why I had those lines there. This can now be gone. And so a breakout above the trading range in general sets up a measured move the size of the trading range. And so we know that 27.25 is the measured move above bar 1's trading range. What can happen? Well, we can go above it and fall back, or we can go below it and come back. Then we have extended the size of the trading range. Okay? But in this case, because we're at the open, chances of staying in this small range forever are smaller than a breakout that leads to a measured move up. Now, how can we see that better? Well, we can see that better by just looking at, I don't know, 30 seconds chart. Okay, so 30 seconds chart. This was the open, and then we need, what is that? 10 bars. So this was a trading range. Okay, so this is the 5-minute bar on the 30-second chart. Now we've got a breakout here above that range, we got a breakout confirmation, and so you're pretty sure that when that trading range becomes a breakout, that we're going to go a measured move up. Okay, maybe on a 1 minute chart, it's more clear actually. So we got this range here. We went like the 1 minute bears didn't get their target. They didn't get a 1 hour. So if they don't get a 1 hour, chances are that we're going to go a measured move up. And so it's a trading range 27, 27, 25 is the target. So you could have bought above 3. And then you're at 1 time risk reward now. So you are at 24.50. You want more. So you want 28. You want 27.25. You want 28. Some bulls will take 24.50. If it comes down now, you'll get out quickly, right? Because then you know that the bulls are not even hoping for this. They're exiting. So that's good to hold, but we shouldn't get too bearish if you're buying the 3 close. What are the chances that bar 1 is the low of the day? Not very great. I think this is in the middle of the range. I think there's gaps below. This is not a breakout and it's not very strong. And so chances are that we're going to go below bar 1 somewhere today, but we still have 76 bars to go. And so it's a long wait to see that, right? Still far away, but the hourly bar is trying to break out above this high, above yesterday's bar 52 high. That would lead to 44.41. And so buying above bar 3 is about 20 points target to 44.41, which is the swing setup. We're still going to 44, 27, 25, 44, 28. Nothing to sell. We're still in a sort of a channel from yesterday, if you want. Okay, so we're finding some resistance at the top of that channel, but chances are we're going to break above it and then set up a measured move the size of that channel. Here we go. Still nothing to sell, right? We hit the bear stop, so measured move up is more likely. And the higher we get, the higher those probabilities will come. I think bulls will get out below the 3 low, and then bears will want to hope that if we get below the 3 low, that we're going to get a measured move down, maybe that range of the 3 bull bars, maybe the whole range. But I think the chances are good for the bulls, that 27, 25, 28, and then see how we close the open. If we close the open around 44.30, that area, 44.41 will become likely. But it's still very hypothetical. There's 7 bars left for the close of the hour. 50-minute chart looks good, right? So 50-minute chart, a solid bull bar. So what can you do? Well, if it's a solid bull bar, you're expecting at least 1 R on a solid bull bar. So that is 28.50. 50-minute chart gives me another target in the same range. So I'm holding. 50-minute chart looks good, right? So 50-minute chart, a solid bull bar. So what can you do? Well, if it's a solid bull bar, you're expecting at least 1 R on a solid bull bar. So that is 28.50. 50-minute chart gives me another target in the same range. So I'm holding. And I'm actually raising my target to minimum 28.25. I think the 15-minute bulls here are going to get what they minimum want, which is 28.25. Is this sellers above yesterday's high? Is this bar sellers above yesterday's high? I don't think so, right? This is some profit taking at yesterday's high, yes, but it's not sellers at yesterday's high. This is some profit taking at yesterday's high, yes, but it's not sellers at yesterday's high. Let's see if I have an example. These are sellers above yesterday's high. I don't have more. Okay. see. These are sellers above yesterday's high, right? So immediately big bear bar as soon as we go above yesterday's high. Immediately sellers above yesterday's high, so one bar, but then the second bar immediately sell off above yesterday's high, big sell off above yesterday's high. That is selling above the high. Now, if we only get this above yesterday's high, I think it's profit taking. Spooking out people that put their stop to break even, right? Which is why you never do that. So you buy the 3 close, it comes back to the 3 close, actually gives you a second time to enter. But people that put their stop to break even after we hit 1R just got stopped out at the lowest price. Okay? So stops are where stops are, and they're not break even prices. Because very often it will actually do this. To me, it is actually confirmation of this measured move. So 5 comes down to test the 1 high, goes back up, gives me extra confirmation that that measured move is in place. So 27.25 is my absolute minimum profit that I want to see. Okay, I'm just not interested in any less profit than that, because I need to offset my losers. So I need big winners to offset my losers. I'm not interested in 3 points, 4 points, 5 points, or where are we? 5 points for me is not enough. I need big wins to offset losers. Well, big wins, at least if I have these targets, then why not hold until those targets? So we're not going for smaller profits than at least here, and hopefully 44.41. Now 44.41, what do I think of that? Because it's FOMC, I'm less inclined to think that we're going to go there. It's got a good chance, but because of FOMC, like if FOMC would not be in place, then I would think that we would go there, but now I'd be less inclined. But definitely think this range is in play. Okay, high 1 setting up, 3 bull bars, a pullback, a test of the 1 high, and a high 1 setup. There might be sellers above a high 1, but chances are as well that you're not going to get a high 2. You're just going to only get a high 1. Bar 6 is the close of the hourly bar on the ETH chart. So let's take a look at how that closed. Well, it went below that big bull bar. It reversed up, and we're now at the close of that big bull bar. So there's some profit taking from bulls that bought maybe that close more lower, and now we're back at that close when they're looking to take profit. It's a big bull bar, so chances are big that we're going to go at least 1 tick above that big bull bar. And bulls are trying to get to 26.75 above the bear bar there. What would be a 1R on this bull bar? Well, that would be 13.50 to 24. So that will be 34.50. But there's some resistance here, right? So we tested this price a couple of times, and there's a lot of bulls that were starting to take profits there. All right, so how are we doing on this? So we got a new high, that's good. You could see this as a range as well. Still nothing to sell. There's nobody stuck. So bulls have free play if they want to take this higher. So in order here, 27.25 is a measured move from the bar 1 breakout. 28 is the Globex high, and 2R on bar 3. And this one is the 1R on the 50-minute chart. Okay. So was that a target or was that a target, right? That is the measured move bar 1, 27.25. Now, it's not going to come down, right? It's just profit taking for people that took profit there. The next target is 28. Now, what could happen now? Well, if we have a trading range with a measured move up, often price comes back and touches the breakout point. So if we would get a big bear bar, then we would hit the one high. That one high would be the target. I'm thinking we're going to go 28 and 28, 25. So keep holding. There we go. Ka-ching, ka-ching. Okay. So are these targets? Yes. Is 40.41 the next target? Yes. But let's see. You can probably exit now at one tick below a bar, right? So just holding on. If you would put your stop now at 25.50, that would be a reasonable profit. You want to get to 44.41. But it's not behaving as a traditional bull trend, right? You had a bear bar and an inside bar, trading range behavior. You have now a breakout to upside targets. You had one leg. This is the second leg. So this is not your traditional bull trend. Although it's very bullish, it's not your traditional small pullback bull trend. Small pullback bull trends is what you want to see. Those are by far the strongest of trends. This can go to 44.41, yes, but it is much more of a tricky trend, and you need to be quick to make decisions. And 44.41 is a target now for the bulls. So we're now at 9 points from bar 3 close. Ranges from yesterday were about 30 points, so 12 points is about a swing target. 20 if you can get it, 12 is okay, so that would be from the 21 close, 33, 34 area. You can also say, well, bar 6 not tested only the bar 1, but it also tested the 52. So it was a breakout above this range, or above this range, maybe 53, right? Because it tested that high of 53 and then it reversed up. And so the target of that breakout is 39.50. I mean, don't short. Selling is fine if you're getting on the longs, but don't short. Nothing to short here. 6 is the new low, right? And so bears would want to get to the 6 low and then measure move down. 6 is the new low. But bulls make money. It's not a micro channel anymore. 6 went below 5, so there's no micro channel. It is a form of a wedge, probably. So I'm hoping that I've showed that people that, well, no, let's say it in a different way. A lot of traders suffer from small profits and big losses. It's probably number one issue in beginner trading. And so I showed you how to retain, how to find targets so that when you're like in doubt at the 5 low, so that closes down below, that is maybe a failed breakout, you're thinking, oh my God, I need to get out of my longs. We're going to go down, we're going to go to the middle of the day. Well, that was a confirmed breakout to 27, 25, 28 area. The 50-minute chart is at that point as well, where you're going to get a measured move up to 28.50. And so there's no chance that I'm going to get out, right? I'm just going to stay until those targets, and I either hit them or I get stopped out. And if I do that 100 times, I'm going to make at least half of the time I'm going to make money. At least 30% or 40% I'm going to get out break even. And 10% of the time I take a loss. So how profitable is it to keep holding on to those targets? That's what you need to do. And so right now, if there's no reason to sell, you can just hold on. You can actually like scalp out maybe if you want. You can then look to buy again if we go higher after a pullback. You need to resist the urge of getting out on a good trade, right? And so if you went out one tick below 5, you've just missed all of that, right? And you need that win to offset your next loss. Okay? I'm only taking good trades to offset losing trades. And if I do that correctly, money will come as a result of it, not necessarily as my goal. On the 50-minute chart, we're gapping. So the low of the third bar is above the high of the first bar. That is this gap. So the low here, the high was 2150. The low is 2250. So that's this one. This one probably. There's a gap here. So could become a measuring gap. That was a measuring gap because we're at that target. Okay. So will this be the high for now? Will we go below 6 now? Could be. Like we have a lot of targets that we have reached. There is a lot of profit taking here. Bears will want to break the 6 low and come down. Bulls would just want to see a pullback. This is profit taking. This is 2 times actual risk reward on buy 3 close. So they have to take profits, right? If you take 2% risk on your account buying the 3 close, putting a stop below 3, and you're at the 8 close, your open risk is 2 times larger than your initial risk. And so any risk manager would order you to take either profits or raise your stop. Okay. So you need to do one of the two. Well, in this case, maybe you take some off and that creates that bar 9. Or maybe you raise your stop to below 6 and then you can maybe stay in the position, but then still you are at almost 2 times risk reward. Now we're still getting high ones. Okay, so bar 6 was a pullback because it went below 5, but it triggered a high 1 and we went up. So if high ones are working for the bulls, then what is the chance of a low one working for the bears? Super small, right? Trends develop in a way that they go slower. So a high 1 at some point stops working and you'll get a high 2, right? So instead of a 1 bar pullback, you'll get a 2 bar, 3 bar, 4 bar pullback. And so the pullbacks get deeper. And then at some point you get a wedge, and a wedge breaks the trend line and sets up a possibility for a major trend reversal. But as long as here the high 1 is working, the trend is strong, we're gapping up on the 50-minute chart, so it's actually a strong bull trend. Although it's behaving as a lag in what will become a trading range, it's still a strong move. So if you've taken profits here, then there's 2 things that you can do. You can count your profits and wave dollar bills at yourself, or you can actually take a look at past and historic FOMC charts for getting some idea of what might happen tomorrow. And then maybe you can find situations like the last time where there was an extended rally onto an FOMC day. Bar 9, by the way, closed as an inside bar. So it's again a pause in the bull trend. So we had 3, 4, 5 pause on 6, 6, 7, 8 pause on 9. So these are 2 legs, and expect some sort of a ring, some sort of a wedge when there is a 3rd leg. Okay, so then you have 3 legs that will initiate even more profit taking. There's probably bears now scaling in above 9, like they took some points above 2. I'm expecting us to come back to the open because of that gap above bar 2. But I'm expecting us to definitely come back to the 9 high if we break above the 9 high. This is a lag in a trading range. So you don't know if we'll come back today or tomorrow or Friday, but I'm expecting price to reach back to 44.18, back to the 6 high, and back to the 9 high if we break further above it. What was I going to say? Oh, yeah. FOMC. So at 2 p.m. today, there's an FOMC report that often strikes an initial response and a counter trend. And then half an hour later, the press conference starts and you get often another response or another flood of buying and selling. Now, we've had a very strong bull trend on the daily chart. We have targets above. So we have the August high, which is monthly, which is 44.5650. And so if we get a big bullish move at the FOMC report, that could actually be the final climax of the bull trend. So I'm expecting that if we get a huge move up, 44.56 August high type of move, we could easily go 50 points above it, but then there would be massive profit taking. And I think buy the rumor, sell the fact is in play there. So that could be the last move. If we get a huge move down in such a strong bull trend that we've had over the last couple of days, then I'm expecting bulls to buy that sell-off, even if it goes down 100 points. But I would expect bulls to buy that sell-off and bring us back to current levels again. Okay. There's nothing really that is new in today's press conference. Inflation is currently at 4% in the US. The level of the interest rates is known. So there's not real news that could spark out of today's press conference. Tomorrow is the European Central Bank doing the same. I think they're still going to increase rate hikes because inflation in Europe is a little different and more spread between north and southern countries. But I'm not expecting any news. So that doesn't matter because institutions don't know how they are positioned against it. But I think it's such a climactic bull trend, a big move now, further up could be the end of the move, right? And so on the daily chart, that would mean that this parabolic wedge probably gets a double top and starts coming down at least 50% of this whole move up over the last couple of days and weeks. And then on the monthly chart, this big bull bar might actually get a big tail like here. So as March had a 100 points tail on top of the bar. So we could actually get much further up and then sell off until the end of June so that we get that same 100 points tail on top of June's bar. Okay, so the high one, as I said, the high one is probably working above 6, but it's probably not working above 9 anymore. 9 was an inside bar with sellers above. And so the high one is failing. We actually have a double top that the bulls need to take out quickly for it not to come down to the 6 low. But buy the close is also over. So bar 9 was the first bear bar in a buy the close rally, and bar 10 gave all of the bulls the chance to exit at the buy the close price of 8. Okay? What does buy the close mean? Well, as soon as the bar closes, you buy with a limit order at the close price of the bar. Okay? So you could buy this close, that close, that close, that close, that close, that close, and you could have gotten in on the trend. And even if bar 9 was the first bar that disappointed you in this buy the close rally, 10 gave you the chance to exit at that bar 8 close, and that's how you get out. Now we went above bar 9 once, which is a bear bar. In a bull trend, that means that we're going to go above bar 9 twice and then see what's there. Okay, so we're going to attack that bar 9 high at least 2 times, and then bulls will want to see at a minimum a measured move to 44.33, which is that basically this pullback range. It's a little trading range right now, so this is not a trading range where the breakout fills 80%. This is actually a trading range where the breakout to the upside is likely, right? Because it's a pause in a bull trend. And so you're expecting this little trading range to actually fail and move up, a measured move up to 44.3325. But bulls need to break this double top. Again, you can sell below any bar if you have bought the 3 close. We haven't gone below any bar yet, so you're still in the trade. And you're at, where are we at? You're at 12 points profit right now. And look at the strong breakout on the hourly chart. I mentioned this is a range, so here to here. This bear bar started the pullback, right? Leg 1 up, leg 2, and then up. So when we break above it, you're expecting that measured move 44.41. We're probably going to get a deeper pullback before 40.41. We might actually have to go sideways all the rest of the day if this is now the third leg. Okay, so it's a leg in a trading range. Bears are starting to scale in at these levels. And so at some point, if we don't reach it, we're going to just go sideways to down, and close maybe some gaps. So maybe to the 6 high, maybe to the 6 low, maybe all the way to the 2 high. I don't expect that, but there's an increased chance now of us going sideways if we're not accelerating up quickly. So I told you to not short, so nobody shorted. I told you to either buy or be flat, and so everybody made money today, right? Bears are scaling in now. So they've started to see that we're going to go back into the 5 high, for example, right? So they're selling new highs, wanting to see us coming back into old highs. I would not sell anything. It's okay to exit longs now, right? We went one tick below 10. So it's actually a low one for the bears, the first sell opportunity all day to do something. Okay? So okay to exit longs, but I wouldn't short yet. Good bear bar 10, bear bar 11. That was to be expected. We're closing gaps to the 6 high. It's a lag in the trading range, right? So what do you expect in the trading range? Gap to close. There's going to be a lag in the trading range that goes up and that comes down as a nice arch. But you just don't know if and how we're going to close the 2 high. So let's say FOMC starts, you're still in the trade that you expect to close the 2 high. And now FOMC comes. Like, are you going to hold or not? So best to trade what you see, knowing that you have to get out quickly, because chances are that we're going to come down to at least a 2 high somewhere along the day. If you think about it, every gap closed. So the gap to the 3 high got closed on the 6 low. The gap to the 6 high got closed on the 12 low. The gap to the 9 high got closed by the 11 low. And so what's the chances of this gap staying open? Well, it is possible that it stays open today, but chances are that in the next few days, it's going to close. This is a lag in the trading range. So trading range, buy low, sell high. Well, that's easier said than done if you don't know what low is and if you don't know what high is. Okay, so obviously now this is high, but what if it goes here, right? So this is high and then this is higher. Like, so where do I sell? Sell high, sell more higher. How many times do you scale in? Well, I'm thinking 6 is low. Okay, so this was a run up, so leg 1, leg 2, so 6 is low. Okay, so I would buy, if I'm scalping, I would buy around here and then around the 2 high. If I'm selling, well, now that I know that gaps are going to close, I'm selling here and I'm selling around the target 44.41, 44.39. Okay. Now we're in the middle of the current range. So the current range is the 11 high, 6 low. We're right in the middle. So you don't buy, you don't sell. What's now setting up, is that a high 2? Is this a high 1 and a high 2? No, this was a new high. So the count starts over. So above 12 is a high 1. And high 1 just showed that high 1s are not working anymore, right? Buying both 9 didn't get you what you wanted. Did it even get a measured move up? No. So bulls are getting disappointed and they're exiting, not to give up, but they're exiting because they think they can add on lower or they're going to get a pullback. They want to see when the pullback ends to be able to buy again. So what was the 12 high doing there? Well, first of all, it closed the gap to the 10 low. But second of all, what if you bought the highest close of 8 and you didn't exit after 9 during 10? Well, you probably bought more at the 8 low. And so you could have gotten break even at the 12 high, 27.50. Okay? That was why the 12 high was doing there. So you got to be careful right now because any of these bulls that bought in here have exited right now. And if bulls are no longer there, the bears will try. The bears have not gotten any money because they sold the 11 close and they want the one high, which is 1 time their risk reward. Okay? The bulls will try to overpower them. They think pull back like 1, pull back like 2, and then we're going to teach you a lesson and set up a measured move when we break the 11 high and go up. And they got a good reason. They got the trend, they got the measured move on the hourly chart, they got a lot of things working for them. But I'm not buying this high 1 until I see better breakout. And so best that if you were long, that you're flat looking for a pullback. And if you were short, well, you shouldn't, right? If you are short and you're thinking, okay, gaps are going to close, you need to have big bags because you can sell above 12 thinking that we're going to close the gap to 12 high. But you need to be able to scale in right to these targets and maybe have to hold during FOMC for that to work. Right? So that's a tricky business. Can you buy above 12? Well, you could if you can scale in lower. So if you want to buy above 12, well, we're now in the trading range, obviously going more sideways. So you want 2 times risk reward, actual risk reward. So actual risk reward, buying above 12 for a high 1. You want 34.25, but then you want to be able to buy more at the 13 low so that you can get out break even. Now you see now the same thing happening on the 50-minute chart. So the 50-minute chart has now a pullback, which is the 11 high to the 12 low, right? And so on the 5-minute chart, that sets up a measured move, 38.75. Okay, so that is 23.75 low, so that's a low of 12, to the 31.25 high, which is the high of 11. So if we can break above this 15-minute bar and go up a measured move, we get to 38.75. There is no breakout until we see a breakout, but it's good to know, right? But we're going sideways here. What are the chances of us going sideways into this range for the rest of the day? It's actually much bigger than you might think, because the new positioning of bulls and bears is going to stall as we get closer to FOMC. So it could actually be they're neutral for now, or the bears, they still hope, like they still have a new high and they're in the 11 close trade. They want to go back to the 1 high and the 2 high. So right now, it's not as bullish anymore. Better to be flat. As for shorting, I wouldn't, because bears have not done anything except for creating a big 11, but the follow through on the 12 was horrible. I think they're looking to exit, selling more above 12 with the 11 close. I haven't seen during the 1 minute if they actually got it, but if they sold the 11 close, selling more at the 12 high, they need 27 to get out. This was good, right? So the hourly bar closed above 21.75, above yesterday's 52 high. It didn't close on its high. So what are the chances of this hourly bar getting a 1R? Well, that's in the 37.75. So one tick below the low of the hour to the close of the hour, which is the close of bar 12, gives 37.75. So there's more and more targets in that 37 to 41 area, but we need to break the 10 or the 11 high before I want to do anything on the long side again, right? Or at least give me a good setup. And I don't think that buying above 12 or buying above 13 is a setup that looks nice. It's in the middle of a developing range now with the 6 low and the 11 high. So I'm a little scared that we're going to just plunge down to the 1 high. Did I not? Was I muted during that last comment? Probably was. Okay. So apologies for that. I said, if you sold the 11 close and you sold more at the 12 high, you would want to get out, right? This is down, up, down, so there's a bear stop there. So if you sell the 11 close, you lose conviction when we go above the 12 high. And so you sell more at the 12 high, you sell the 11 close, and you want to get out, break even, and that's 27, okay? So you see what happens there at the 27, we went one tick below it and reversed up. So every bear that sold the 11 close sold more at the 12 high and left. So the bears have left the building, and it gives the bulls a better chance to now break out to a new high and upwards. But we're still in the middle of this range, so it's still a tricky buy. I would only buy here above 13 if you have the means to scale in lower, okay? And scale in bigger lower than here. So you can buy above 12 high knowing that the bears are out, but you need to be able to scale in if you want to break even once we get lower. Or you just put your stop and hope for the best. That also points to the fact that I'm thinking that bar 13 bulls are not taking 2 times risk reward, but they're now taking 1 time risk reward. So I'm thinking now that 31.75 will actually generate more profit taking than maybe straight up to the other levels. So it's a buy for a new high, but it's buy for probably 31.75. Bears are out. That gives you confidence, right, to buy above 13. But chances are that we're going to hit this 31.75 and then going to come back, and at the range that we're in, say 12 low, 11 high, say 6 low, 11 high, that we're going to expand that a little, and instead of reversing up to 44.41 area, we're actually finding sellers here, and that we're going to go more sideways between 44.31, 44.22. I do think we're going to hit 44.31.75. All right. So you see what happens there, right? We're in the trading range context, and so chances are not that we're going to get swing targets anymore. We're in a trading range, and so the 13 bulls take a 1-hour profit instead of a 2-hour profit. Bears are now scaling in at new highs. They know that we're closing gaps. There's a gap above the 14 high, and so they're selling at the same point as where bulls are selling. So there's some double selling pressure here. The bulls from the 13 close are selling there to take profit. The bears are selling there to initiate shorts and take those shorts off at the 14 high. That is much more tricky than buying the 13 close, because there's also targets here that if the bears don't get their targets, they will scale in higher and higher, knowing that we're then going to close other gaps and take a profit there. So I wouldn't be selling with limit orders here, certainly not as a beginner. I would buy and take profit on the 13 close to the 31 high. So bears almost have what they want, right? A gap close to the 44.30. So that's 2 points or something. Yeah. I think they need one more tick. Yes, okay. So I took that short. I literally recommended to not do that, and I took it myself. But I still stand by my target. So I bought the 13 close and sold there, reversed, and I'm now out at the 14 high. But again, that is risky if you're a beginner and you don't know where we are in the cycle. Like, are we still in the bull trend, or are we going sideways? That is just risky stuff to do. Better to see that we are more sideways, so better to still buy and then get out at new highs than to do the opposite. This is still a bull trend. Now, can we argue wedge stop? Leg 1, leg 2, leg 3. I think it's going to be more sideways here. So I said 15 high, maybe the 6 low, but probably the 12 low sideways for about 10 bars or so, maybe 20. maybe all the way to FOMC. Bears are making money, right? Bears are setting new highs. Bears are looking for gap closes. And so the bulls are taking profits. So the bulls are taking scalps, and now the bears are taking scalps. Limit order bears buy the closed bulls. So bulls still more powerful than bears, but bulls are exiting positions rather than entering positions. Now, on the 50-minute chart, I said if we can go above it, then bulls are hoping for a breakout. We have 26 seconds left, and we're not closing good enough above this bear bar to make me think that a breakout is imminent. But we went above it once, so we're probably going to go above it twice. So 31.25 is most likely going to be revisited. So that was here, and we're probably going to go back to 31.25. You can call this a wedge top, right? It's now more likely to be a wedge top. But buyers are waiting around 6 low, 12 low. Bears hope that the 50-minute chart will set up a measured move down to the 44.1875 and then make them close the gap on the too high. That's actually not unreasonable to think because of the trading range context. And the sad little close here on the 50-minute chart, that should have been above that bear bar. Now I said we're probably going to go above that bear bar twice. What if we don't? Okay? Then I think the bulls can still get out break even because they'll sell more at the low of this 50-minute bar and more at a measured move, which is the too high, and they'll get out break even that way. So bulls hope for a move above the 10 high and then a measured move up 38, 44, 41. Bears hope that will fall below the 13 low and then set up a measured move to the 2 high. And considering trading context and the bearishness, they actually have a good point, right? So they have been scaling in, and now they're hoping that the 2 high will be touched. I don't want to short. If we get below the 13 low and we set up a nice pullback, then I would want to short. The chances are that if that happens, we go and plunge directly, and then I'm going to miss it. So that's why I'm not interested in shorting, because I'm probably going to miss it anyway. So I'm interested in taking quick profits now on longs. Now, can this be a spike or can this be a channel? Could be, right? So channel like this, and then breakout here would take us around to the 40.41 target. Yeah, that could be. Like the response on bar 16 so far is super sad for the bears. You make a good bear bar, and what the bulls, well, they buy it. And they buy it because they wanted to go one tick above that 15-minute bar again. They went above it once on the 50-minute chart. They want to go above it twice. And then on the second attempt, they want to see their attempt succeed, of course. I still think we're going to 44.40 area. But you got to keep in mind risk reward, right? So with probability is one side of the equation. I think we're going to probably go there, but where's your risk reward? Bears have probably a low chance of getting to the too high from here directly, but their risk is maybe to here, their reward is to here. So bears at this moment have better risk reward than bulls, because bulls think that we can go 10 points up and their stop is probably below 6. So there is just a little bit better than 1-to-1 risk reward for the bulls here. It's reasonable to buy about 16 probably. But again, bulls will be taking profits at new highs. Okay, so again, this will be 27. What is it? 27 to 29.50. So 32 is 1 hour. 34.50 is 2 hour for them. Okay. So this line we can take away because that was the take profit point of the 13 rules. This was the 2 times profit target. So we just have these targets left. And then of course above here, doing way above us the August high. So what if this is a wedge and the wedge fails? Well, that would be the range of the wedge upward would give us to 44.50, which is close to that August high. I'm thinking more likely sideways, and then maybe 44.40 on FOMC release. If we go sideways, FOMC release probably goes down, tests the 2 high, moves up, tests the 40.41, or vice versa. And then probably, maybe not today, but tomorrow, August high. If FOMC ranges up quickly, then August high would be in play for today or tomorrow. But I do believe that that 2 high is going to have some magnet effect today. And if it's not before FOMC, then maybe during FOMC. So quick touch there and then a bounce up, or a quick bounce up and coming back. But that 1 high, that 2 high, those are in play for later today if the price action sets up that way. You've probably heard people talk about the bar 18 rule. By bar 18, there's a 90% chance that we've seen either the low of the day or the high of the day. And I did the calculations and the stats on that for the last 2 years to just verify what the percentages are exactly. But I think in a FOMC day, there's an exception to that, right? So 2 p.m. FOMC release, 2 p.m. Eastern, is to be seen as a new day. And so there's a big chance that an FOMC release or a big news event like that can both cross the high and the low of the day. And you should not read into that the rule fails. You should see a big news event as a new trading day. And so it's bar 1 in that sense. I've also mentioned the last time I was presenting was also on the FOMC, no, the time before, that looking at ranges before, like you're trying to calculate measured moves maybe, or seeing where an FOMC release can go to, that you should compare apples and apples. Okay, so if an FOMC day, if an FOMC bar is 3 times bigger than the rest of the 5-minute bars, well, then you should compare targets, resistance, and support and measured moves based on something that is 3 times bigger. Now, what's 3 times bigger than the 5-minute bar? A 15-minute bar. Okay, and so on the 15-minute chart, when the bars get suddenly 3 times bigger, well, you're measuring potential resistance and targets and measured moves on the 50-minute chart. If the bars get way bigger, maybe 12 times bigger than normal, well, then you're looking at the 60-minute chart. So if bars now suddenly get way bigger, I'm not looking at these 5-minute bars to compare the price action with. I'm comparing price action that is 3 times more volatile with a chart that is 3 times bigger, which is the 50-minute chart. And so if bars get huge, you're not looking at maybe a measured move of this little range. No, then you're looking at measured moves maybe the whole day's range, or an hour's range, or a 2 hours range. So I think it's important to have the 60-minute chart and the 50-minute chart way more present as soon as the bars start getting very volatile. And then disregard more what's on the left as 5-minute bars, but refer to that as 60-minute bars and 50-minute bars. And that's what I mean comparing apples and apples. The same thing counts on Globex. There's a lot of people that look at Globex. I look at Globex as well. But what you see here is that the gray area here are Globex bars. The light gray background here are the RTH bars. Well, the RTH bars are bigger than the ETH bars. And so on ETH, I don't want to compare these tiny little ranges. I don't want to measure maybe this. I want to measure bigger ranges because I'm basically want to look at a 15-minute ETH chart to see targets on the RTH chart. right? This information means nothing when the stock market opens. Then the bars are going to be way bigger than all of these bars. So what does it matter if I measure like this type of range? Well, that is just half a bar during RTH. So you can't compare, you need to compare volatility with volatility that's equal. And so RTH here is much better to compare. Well, this is the CPI, but let's go one down. So let's show it in a better context. Okay, here. So RTH here, ETH here, globals, and RTH here, well, you might want to look at a 15-minute chart of this or a 60-minute chart of this to then count the ranges. So the range here is not maybe this little range. No, the range here is much more likely to be this whole range of ETH to be used as a measured move up. Okay, so if I use that measured move up, then what do I use here? Probably an hourly chart. Okay, so you need to compare apples and apples. If the volatility is 12 times bigger than here, you need to look for targets and resistance on this chart by looking at the 60-minute chart. And that is the same for F1C. So at F1C, you look at the hourly chart, and you look at the 50-minute chart from the past hours or so to determine what the good measured moves are and the good ranges. And often it's actually a daily range that just expands, sometimes on one side and the other side, or sometimes it expands it and then goes down and sets a measured move, the whole daily range. Okay, so we're going sideways, like I said. The sideways is now from, let's say, bar 9 to 19, so we're going sideways about 10 bars. That's still marginally compared to the 50-minute chart, but the 50-minute chart just sets an inside bar. So 30 high and the 26 low, that is 4 points. If that sets up a measured move, you're at 22 at the 6 low. So chances are getting increasingly bigger that the bears can break to the downside now and close the gap to the 2 high and the 1 high. It's much more neutral. Like I said, the bulls exited their 13 close at the new high. The bulls here on 16 got no follow through. The bears on 16 got no follow through. We closed within that range. And so limit orders and scalpers are making money. The range is about, well, most of the range is about 4 points tall, right? So the 30 here with the 26 there. And so better not to trade in a tight trading range. Bears are hoping a breakout below the 13 low, which sets up a measured move to the 2 high, right? That is their hope. The bulls are hoping for a breakout ultimately of this whole trading range to get to 44.41 and 44.38 to 44.41 zone. Bulls hope that above 18 they can get a breakout. They see this as a high 2. If you count it, it's a high 1, but you need to see it in the context of pullback A, B, C. And so it's A is the 15 coming down, B is the 16 going up, C is the 17, 18 going down. And so it's more to see as a high 2 than as a high 1. And so bulls rightfully assume that the bear pullback, the bear two-legged pullback is over, and they now try to go above 18, hoping that they can get at least 2 times their risk, which is to 35. But bears will be trying to sell at the line that I drew, where the 50-minute bulls are almost guaranteed to come. Now, if this whole thing goes higher, then we have a breakout above that 50-minute range, and so then 38.75 or 44.41 are possible. But at the same time, we're going so much sideways that bears are strong and scaling in. They will definitely scale in here, and if they don't get their gap closes, they're just going to scale in 44.41 and higher. And they'll probably make money doing that. So bulls did not get what they wanted on 19. They wanted to have a bull bar that went at least above 17 so that the next bar could go higher. they see this as a fail and they'll buy more at the 19 low to get out break even, or they'll probably exit one tick above 18 to see a new pullback. Maybe we'll get another like that. The bulls still want to hold their 13 high. And again, the bears want to break the 13 low. The bulls want to hold on to their 13 low. The bears want to break that and get to the 2 high and the 1 high. We're in the middle of that range, so it's tricky to do anything. You're limit scalping for a point or half a point, or like the range is super tight. So better to wait, or if you're still feeling confident about the 44.41, then you can go to Walmart or wherever you are in the world. You can go to Costco, you can go to Saturn, you can go to Mercadona, Carrefour, whatever you have, and then just put your stop and take a profit limit order around 44.39, 44.40. Still more likely to go up than down, with the 13 low as the mediator between the two. If we break the 13 low with a bear bar follow through, then we can go to the 2 high. As long as we stay above the 13 high, or we go above it but we fail, still more likely to go higher, at least through the 31.50 and possibly to 44.41. Someone says I'm hitting the gym. Well, you can also do that. It's cheaper probably than Walmart, and it's good for your discipline. Trader's discipline is made in the gym as well, but man, good luck. I'm not coming with you. And it's good for your discipline. Trader's discipline is made in the gym as well, but man, good luck. I'm not coming with you. That is life in Europe, my man. You trade like European market in the morning, you go to the gym in the afternoon, and then US Open, and you trade again. We're still looking at this. So the 6 low tested the 53 high and sets up a measured move. With the good, like it tested that 53 high from yesterday, and it reversed up nice and good. So 39.50 is then a measured move on that time frame. And I'm still looking at that. So my conviction of these ranges is still higher than my conviction of a break of 13 and a test of the 2 high, 1 high. But we're doing consecutive, well, we haven't closed this bar yet, but we had an inside bar on the 15. We're doing consecutive inside bars and small bars in a sideways range. So bulls are hoping this is a pause, and a final flag to 44.41 could then set up, and then bears are hoping for a reversal down. That would be a good story. There's still more bulls than bears here. Bears are not getting traction. They're not getting follow through on any of their attempts. And if we break the 15 high with conviction, 44.41 is just like 1 or 2 bars away. That is how quick it can go. And you got these magnets, right? So if we break here, everybody knows where we're going. And so bears step aside, waiting to scale in at that range, at that area. And so sometimes if you get a lot of bars going sideways, you suddenly get 1 or 2 bars that explode up. And right where beginners would like give up on their shorts, that is where the bears come in and short that whole way down to the 2 high. So I told you we were going to go back to that line. That's where we just tested. So we went above this 15-minute bar once. We go above that 15-minute bar twice. And when we do it this time, we're probably, the bulls will probably hope that we're going to get a breakout now. The problem they have is that that 15-minute bar was an inside bar, so it's a triangle. You can see the triangle here. And so there's going to be some sellers selling this back to that 50-minute high here. Is it there? It's 30. Yeah, so that's 30. So that's 16 and 17. So they're going to be selling for a little gap close to the 20 high. The 20 was also an inside bar. Okay, so some selling at that entry price. So the 50-minute bulls scale out. Bears scale in because they want to see a gap close to 16 and 17 high. Bears scale in because they want to see a gap close to the 20 high. We're still going sideways. There's no breakout yet above 15. So bears are taking quick profits. And probably this was a 1-hour target based on the 20. No, not yet. Quick profits. And probably this was a 1-hour target based on the 20. No, not yet. We have, after this bar, so we still have 3 more bars until the hourly close. Bulls want to see a good follow through on their breakout attempt so that 4440 becomes more likely. So we do have rows coming in. I'm 80% sure because that's what the calendar says. We do have rows come in when I get out, so 45 minutes from now. And then she'll stay on during the FOMC release. So you got some guidance on the side during that event as well. But this is getting better. Now we're getting a breakout. Okay, so can we now jump to 4441? You see the magnet effect? Like this can go up very fast, as said. So we take this as our range, and then this is our range, or this is our range, and this is our range. Then we know where we're going, right? To those lines. So 21, measuring that 1R, 3750. So this range is definitely in play now. Good follow through on the hourly bar. If we can maintain this for another 15 minutes, we might already be there, but otherwise we're going to get there. So we're expanding above this range. Bears will scale in. Bears will still scale in, thinking that we're going to be coming back to 4430, which is an inside bar on the 50-minute chart. It's not going to happen until these ranges. If I kept all of you from taking a short, then I'm already feeling happy. And if I get any of you guys going in on longs, I'm even more happy. I only took longs, and a little short scalp. I took a little short scalp, okay. But I only took longs for the rest. So our good presenter Rose will first have a nice lunch before she joins. So she'll probably open up her chart and then put on the chart that she's having so much lunch that she's not able to talk. And then she'll come in later. So we just closed a 15-minute bar with the low here and the close there. 3950 is its target. If you're at Walmart, you need to get to the desk because unless you put an OCO order at 4441, 4439 area, but otherwise you need to get to the cashier's desk because you need to come home and take out your longs when we get there. So we talked about this last session as well. The fact that we're at targets, some traders think, oh, so at 4441, that is the bull target. I'll just short there. And that is, in general, a bad thing to do. The fact that I think that a lot of bulls will take profits there does not mean that bears will see shorts there. Sure, bears are counting now on the 4430 and maybe the 15 high, but this position there on a strong trend day, the fact that there's obvious targets that we're reaching says nothing about our chances for reversal. The chance for reversal need to present themselves, and the fact that we're hitting important resistance, important bull targets does not mean that there's a space there to blindly go against the trend. Right? Even if it's going 1 kilometer an hour, I still don't want to stop an oil tanker with my hands. Okay? So that's just not a good way. If you are thinking that a reversal might set up here, then you want to see the reversal, you want to see the bear strength in the reversal, you want to see a double top or a wedge top in the second entry, and that's when you take it. But for me, these ranges are profit targets for bulls, and therefore I don't short there, I exit bonds there. It's an important difference. So when we're talking about the August high, yes, we're thinking that the August high will be reached, but there's nothing that I'm thinking like, oh, let's just put a sell short limit order there. Like, no way. Like, we could go August high, we could go all-time high, we could go 10,000. So I will never put a blind sell order there, thinking that we're going to hit there and then dive 100 points down. Like, I want to see price action for deciding on a reversal. Reversals have the lowest probability. If you're in a bull trend, and when you're selling against the bull trend. So just these magnets are just like, it says nothing about reversals. Okay, so 21 with 22 being so good for so good of a follow through, that makes sense that we're going to get at least 37.50. This is also a breakout of this range, so 12 low to 15 high. That is 40.75 as targets. Beautiful, beautiful bull trend. Beautiful. Ka-ching, ka-ching, ka-ching. Is this a magnet or is this a magnet, right? I said when we break out, we could be at that 40, 39, 40, 41 area in 2 bars or 3 bars. And that's exactly what's happening because of the magnetic effect. Bulls sold maybe here or maybe at the high. They only want to, sorry, bears. Bears were selling at these highs, at the 16 high, at the 15 high. They will only sell again when we come to this range. Bulls are buying every tick. Every tick they buy more and more and more, and they'll sell out at this range as well. And so there's double selling pressure. Now, if everybody knows that we're going here, why would you sell here or here or here? And so these bars can suddenly become very large as there's a sort of vacuum to those magnet areas. Now, in a trading range like this, if you break out and get a measured move, you'll often get a move back to the breakout point. So 12 low, 15 high, if that's the range, we're probably going to come back and test or close the gap to the 15 high at some point today. 37.75 was my first target. Remember, that was the measured move, this range. So the 62 low of the day to 53 high, or that was 39.50. This was the hourly range. So the low of 1 to the close of 12. The close of 12. So that's 38. And then the next one is 39.50. And we're just going to look at what happens at these prices, right? Usually we get 2 chances to get out. So if it turns out to be 38s that everybody's using, we'll probably get 2 chances to go out 38. We're not blindly selling out of our longs at that level. We'll see what happens, and then we'll decide. Or you take some off and then leave the rest running, like whatever you want to do. But the fact that there's a target there, you'll usually get 2 chances. If you see strong profit taking, you're like, okay, the next time that we're going to come up there, I'm taking profits as well. Okay. So that's nice. If you want, you can take some off at 38.25, 38. But we're probably going to go and test the other targets as well. It's a strong magnet now. We're magneting up, and so could get a deep pullback now as soon as the magnetic effect is over. But more likely that we haven't seen the high yet. Was this the 1-hour target? Yes, we're also at the 1-hour target. So 38 was good. I think we're going a little bit higher because we closed higher than that. So probably going to take this one as well, 39.50, and then the big one, 40.41, 44.41. We want every tick of this bull trend, right? Life's expensive these days, so we need it. You just got to see these targets being hit all the time exactly, right? How many times did I put those lines at those measured moves, and then you see a reaction at those prices, okay? So there's just no denying of math and targets. So it's probably going to pull back deep to the 30 before it's going to hit 40.41. It's going to be later. I think this was the move. So good to get out because we're getting a deeper pullback. Or the second leg up. Like this is strong, so we might get a small second leg up, but we're very high on the range. But that 39.50 was awesome. That was the measured move. Right? So I said, I see 6, I see a breakout, and I see 6 pulling back to the 52 high. And so I'm thinking that is the range that we're going to use. And not one bar reversed, like we reversed up from the 52 high, which is a big bear bar on some other time frame. But I see 3 big bull bars reversing up from that 52 high. And so I think that's going to be the measured move. Okay. And I said the same about bar 1. So I see a big bear bar on the mini scale, and I think that we're going to go up and measured move that range. And so I'm always looking at where's the back test of some breakout. So if this is a breakout, where's the test? Well, the test was to the 53 high, and so the measured move up is from this low to that 53 high to the tick. Yeah, exits at the exact high of a move or at a daily range or something, that will happen again. Like it happens to me all the time. So there's no bigger feeling than exiting longs at the high today. So bears will want to see 44.30, and they have merit because that was a small little inside bar on the 50-minute chart. This could be a final flag. The range is a little too small to be like a proper final flag. Like usually you get like 30 bars and then some move up and then a move down from it, but it could still function as a final flag. There is a better chance that we're going to get like a small little second leg up to 40.41 area maybe, and then see that. I'm also thinking that the gap to 44.3175, so that's here, that will close as well. So it's still bullish. I wouldn't sell, but I would definitely exit longs below 24. Beef Fits got out at 44.3925. That feels good. That's usually the case if you have 3 or like a couple of targets that the first one gets hit, the second one gets hit, and the last one takes a little more effort. So that will take like another 10 bars, deeper pullback, and then you get there. But this, you need to see this nuance, this back test of 6 to the high of 52. This is a range that on some time frame, this area, can I draw that? Probably. On some area, this is a reversal. On some time frame, this is a big reversal bar. Okay, and so it's a range. It's a 1R of like on some time frame. This bar looks like this. Okay, so it's a big bull bar that has a deep tail below. And so if I think that this can get a one-time risk reward, I'm also thinking that this area can get a one-time risk reward on the bull bar that it is at a higher time frame. And so this whole range, especially with the back test to that range and the reversal up, this range is the move that the market is using. If you don't know the measured moves and you don't know what to use, look at the back tests. Look at the test of the ranges, and then you know what the range probably will be. Or just use like a big bear bar on a higher time frame. So on this higher time frame, I still think, like even if we go all the way down to here, I still think that 44.41 is ultimately the target for bulls. But I do think that it's probably gonna not be reached before FOMC. So before FOMC, so in the next 2 hours, I probably think more sideways in this range. We're probably trying to get more neutral around 44.30 area again before more price movements at FOMC. So on the hourly chart, we had a big tail on top of the hourly bar. We have reached the 1 hour target on that bar. There's a gap to the 31.25, which is here. And bears will hope that we can close that gap. And then on the 15, we have that 44.30. Bears are thinking that we're going to close these gaps as well. So bear targets are that, and they'll scale in higher in order to get to those targets. Now, one-time risk reward selling this bar would give us 37.5. So it would already bring us into the 11 high range. And then it's only a little bit further to get to 16, 17. And the trader in the chat that just sold out of longs at the highest point of the day is hoping fearlessly that this will stay the high of the day for the rest of the day and then pin that chart and hang it on the wall. Been there, done that. It's beautiful. Rigid move on below that double bottom can be 29.50. So yeah, probably going to go down 29.50, 44.30, and at least within the 11 high. Within the 11 high. Now this high one will fail, right? We're so climactic, we're so high that high ones are not going to work here anymore. Typical 10 bar sideways to down situation after a big bull climax late in the trend. So 10 bars sideways to down, bars 24 to 34. So that would be about all the way till 6:30. So that would be noon, 12:30 Eastern. Probably sellers under 25 and 26. You can get a better example of how magnets work. There's a target here, there's an obvious measured move, and when 21 happens, I said within 2 bars we could be at that magnet. That's exactly what happens. Basically the whole world steps aside. There's a vacuum here that just pulls price to that target, and that's where everybody sells. Bear sell, bull sell, the whole shebang sells, and no, you're down 8 points before you know it, right? So if you sell below 25 or 26, what do you need as risk reward? Actual target is to like the 20 high. You would be happy if we get there, the 16, 17 high. What do bulls need if they bought the 23 close to break even? That's also interesting to see. Well, if they bought more at the 23 low and they bought the 23 close, they need 36.50. Okay. So where in your beginning days you would go in here and thinking, oh, this is a strong bull trend, I'm going and I'm going to catch that trend. This is actually where bulls now, what you now realize is that this is a point for bulls to exit. If they forgot to exit here, they'll buy more at the 23 low if they bought the 23 close, and they'll exit there where otherwise you would enter. And so now you'll see that they'll exit at that point. So bulls are exiting there, bears are scaling in there, and so there's a chance that we're going to hit that and then come down again. And now you understand why in the beginning days you lose money just buying high one after such a climax when it comes further down, because that is what's happening there. The bulls still own the market, right? They have it's their trend, and so even if you did not get out, like on the 20, even if you bought the 23 close and you realize your mistake, you can still get out break even. You'll probably buy this low. You'll probably buy more this low if you need to. Now you can get out break even here. If you need to buy this low as well, you're probably going to get out break even somewhere here. Like I say, if you own the market, you can always get out gracefully. Another thing to say about that is break even is break even. Look, I've talked to traders that said, yeah, but then I lose commission, so I'm trying to like break even plus one tick. Well, the market doesn't give you that one tick extra. So break even is break even. If you buy the 23 low and you buy the 23 close, there's only one price that is break even. And if you try to get one tick more because you need to cover your commissions, then the market's not going to give you that. So just accept the way it is. If you want to cover your commissions, just get a good trade extra and you cover your commissions. So, all right, so setups below 26 probably. That means that the bulls from the 23 close will just scale in lower if they have to and then get out break even somewhere else. They're not worried. The bears are hopeful now that they can get to the 20 high, the 16 high, 17 high, and at least inside the 11 high. Okay, good entry bar. So you expect this pullback, because 26 is a pullback for bears. You expect that to set up a measured move. Bears expect the 27, the bears expect that this is now their lower high, and that if they sold either below 25 or below 26, that they can get somewhere into here. And bulls are just thinking, well, if we can get above 27, then we can get bears to exit, and then we can get our second leg up. Their argument is that we're at a 50% pullback, and that this is a two-legged pullback, and that they still need another leg up. Good argument, but I think that this is going to be a 10-bar, two legs, more extended pullback, right? Trend, horizontal, final flag, sets up TBTL, 10 bars, two legs. So expect until about bar 34, at least, that we're going to come back here. We're also going to probably hit and close below the moving average at this point. And still, like, look at the 15-minute chart. Like, there's going to be buyers below here. Nobody's panicking. We're still going to allow bulls to exit later today. All right, we got into the last 15 minutes, so it's Q&A time. Questions can be put into the Discord. Tag my name, because there's so much noise in there that y'all are typing that I don't have enough eyes to look at it. So tag me so that I have a chance to quickly spot them. Let me go back in time. And let's see what's up. Change over from Globex to RTH charts has been troublesome. Yeah, I think this discussion will go on forever. Do you need Globex? Can you do without Globex? I do without. I did with, and I'm now doing without, and I kind of like it without. So I'll just hover over quickly, like what's going on at ETH, and I'll see, oh, okay, like sideways and a little bit this, or maybe get a breakout. Like, I just look at the ETH chart to see something like this that I might have missed. Like, this was obviously CPI, but maybe there was some bear or bull explosion that sets up an obvious target. For the rest, these days, I don't use ETH anymore. But I was swearing by it a couple of years ago, so the discussion will go on forever. It doesn't matter. Like, as long as you don't compare 5-minute bars with 5-minute bars, But if you use ETH, you look at 60-minute charts usually. So I use the 60-minute charts all the time. So I see this big bull bar somewhere overnight. I don't know, maybe it was during the day, but I'll look at it and I see like, yeah, that is going to set up a measured move. And we're now so dangerously close to it that I'm actually quite positive that we're going to hit that price. And the price is 44.40. So we're definitely going to hit 44.40 over the next 10 hours or so. Okay, well, completely off topic there. Apologies. Can you explain measured moves again? Man, I am Mr. Measured Moves, so I'm not talking about anything else, but happy to explain whatever you want if you ask it again for me, please. When you say it's a final flag, does it mean it's a possible reversal? No, that's a better statement. It's a possible reversal. Now, this is not a end of a trend, but it is a final flag. So it's definitely a gift of the market to get out in a huge profit, but I don't see it as the end of a trend. End of a trend is either a parabolic wedge with even then a double top, but I still think that everybody who bought the 23 close can get out. And so this is not a reversal that's just going to endlessly go down. If it does, bulls will buy the 20 low and then scale out. Like they're still able to get out at any price. But it is, no, if you're further advanced in price section, it is definitely scalpable. If you're here at the 23 close, you're looking at, well, the gap to the 31.25 is probably going to close. So I can sell with a limit order disclose, and I can sell more higher. But as a beginner, I would never do that because the amount of times that I was like an idiot and trends went on further, like a further 30 points against me. Like I can't tell you how many times that has happened, and you just feel so stupid. Next now with all of the insights, like of course I see much better what's going on, and so that's why I recommend not do it until you have that level of conviction. Don't stop an oil tanker with your bare hands. But it is like it's a final flag is more. It's better if the range is like very long. So if the range goes on for, sometimes you have these days where you get a quick move, the range just goes sideways for 40 bars. You get extremely bored and dull, and then you get a quick move above the range. That is a proper final flag, and it's definitely an end to a trend because that trading range before it is going to suck price back to it after a breakout. That is a final flag. And with the 44.40 being such a strong target, I still think we're going to get there. Right? That this measured move is just so obvious that 60% chance, well, plus that we're going to get there. Okay. People showing off their dollar bills, all good. Is it typical to test always high and low? The range today was very small, then the chance is 90% that we're going to touch either side. If the range is big or huge, chances are lower. Okay, so no further questions. That's good. I either talked everybody to sleep or I explained everything and everybody understands. That's good. When we were hosting last Friday, any post-mortem as why we misread the market. I don't know why you misread the market. That was a day when bulls got out, bears got in, and we reversed down. There was another target that I said that we might hit that we didn't hit. That was true. That was true. Okay, people asking questions about high one, high twos. So high one is continuation in a strong trend. And so when you're in a spike phase on a higher time frame, high ones you expect them to immediately trigger and set up continuation in the direction of the trend. So you have a spike here, and then you have a pullback. So 6 goes below 3, up below 5, and so by default, it's a pullback. Okay, so it pulls back. This is a high 1, so buying 1 tick above 6 is a high 1. In a strong breakout, high 1s are good trades. If you get, if the high 1 fails and you get a second chance to buy, you get a high 2. It's called a high 2. So that is when there's a pullback, a move up, and another pullback. That's a two-legged pullback, and therefore the resumption after the two-legged pullback is a high 2. Price tries to resume once, price tries to resume twice, and it's a high 2. Now, in the most stringent description, a high 2 is counted as the second time in a pullback that price goes above the prior bar. Okay? Sometimes, however, you've also got to read the context of what's happening. If this is a first leg and we go up and this is a second leg, then buying above 12 or buying above 13 is buying a high 2. In the strongest definition, it's a high 1 because it's the first time that price goes above a prior bar after a pullback. But in this situation, if you look at the context of 11 and 12, it's actually more to be seen as a high 2 than as a high 1. So it's not as black and white as just counting. You also got to look at the context of that pullback. So here, you got a trend, 1, 2, 3, then 4 is an inside bar. Well, that is a pullback. It's an inside bar. So by definition, it's a pullback. And so buying 1 tick above 4 is buying a high 1. Then you got 6, which is also a pullback. Buying above 6 is a high 1. We're still going up. So the trend is quite strong there. I'm looking for a nice little high 2. There you go. So pullback. So breakout 8, pullback 9, resumption of the trend at 10, buying above 10 is a high 1, but we're going back, and so buying above 14 is a high 2. Maybe not the best example, but here you can see it, right? So this whole thing, this whole leg, so from 32 all the way down. So you get price goes above the prior bar, goes above 34, 35. This is the high 1. Now we're in a trading range, we're high in a trading range, so buying a high 1, it's probably going to fail, especially because we just broke these lows. And then we go down, we don't go above the prior bar here, we go above the prior bar here, so this is a high 2, right? High 1, pullback, high 1, pullback, high 2. So it's the second time that we go above a bar, it's a high 2. Same on this leg down. So we start the pullback, above the 48 is a high 1. We go down again, the high 1 fails. Above 55 is the high 2, and we resume the trend up. Strong breakout, above 62 is a high 1. Pause in the trend, another pullback. Above 64 is a high 1. Above 69 is a high 1. Pullback above 74 is a high 1. So there's a lot of high 1s in this strong breakout phase, and you can see that the trend is very strong, go up very steep. And so high 1s are good trades there. In the trading range context, it's much more of a high 2 than a high 1. So here you have a high 1, here you have a high 2. It goes up, not enough for a profit maybe, but it is a high 2. So you got to have the basic count. Like first time it goes above, it's high 1. Second time it goes above, it's high 2. But you also got to look at the context. So high 2s are two-legged pullbacks. High 1s are resumption in strong breakouts after a pause. And in this case, this was a two-legged pullback. You have to see this as a two-legged pullback. So buying above 12, buying above 13 is buying a high 2. Now, in the meantime, we are almost at my targets. We are at my targets for the 16 and 17 high, which is quite nice. That's where I got out. I heard that ka-ching when I was talking. And the 20 high, I'm going to forget about that. Don't want that. Okay, so I hope that caught you guys in the nice run up to 39.50. I hope I got you guys out on time, and some of the scalpers, I hope I got you guys shorting to 16, 17 high. I am going to sign off. And there's going to be a little pause for Rose to catch up on lunch, and then she kicks it off, and she's going to tell Powell what to say so that price is going to behave, and that we're going to be trading it exactly the way that Rose is telling Powell how to behave, which I think is quite necessary. So good luck on that, Rose. I will see you guys next week, I think next week. No, I will see you guys in 2 weeks on June 27 and talking you through the price action then. Once again, thank you very much for attending. My name is Tim Stout. Catch you guys soon. Have a good rest of the day. Thank you all.
Hello, traders. This is Rose. It's Wednesday, June 14, FOMC day, 4 minutes after 1 a.m. Eastern time. Sorry about that. 4-minute delay there. Could have been a lot more, but yeah, that was scary. Everything's working just fine. I don't know how, because my keyboard on the laptop was not working at all. It was completely kaput. It just didn't respond at all. It's working. So it's a little bit of drying. I didn't get shocked. Nothing happened. There are pieces I broke trying to lift it, pop it open, the whole case from the back. So I broke like 3 little pieces. I have no idea what they are and why I need them, so they are now garbage. So all going just fine. Well, let's just cross our fingers, and you know, there's horrendous rolling thunderstorms passing over, and I mean, the whole office shook. So I don't know how that's going to affect my power. Hopefully I will not lose any power, but if I do lose power, I'll try to come back. Okay, so far so good. We're still pulling back. I don't know if we're going to be able to pull back to 44.17, but there is a possible measured move here. Okay. These were my targets. I already traded them, so I was out automatically. I'm going to remove them. So these measured move targets were fine. I traded them as well. So let's clean up the chart and get ready for FOMC. All right, so the FOMC will be released, report will be released around 2 o'clock, at 2 o'clock sharp. And then the Jerome Powell, chairman of Fed, will start to speak. So there's 2 parts to this. Actually, there are 3 parts to FOMC. There's today's and 2 o'clock, 2:30, big moves, both. And then there is the post-FOMC tomorrow, which is reaction to the FOMC. So I'm going to go through some charts here, but I've decided that if this trading thing doesn't work out for me, there's a great future for me at Best Buy, computer repair department. You can bring your computers and I'll repair them for you. I'll give you guys a discount. Anywho, I just found out something about myself. I really do well under stress. It's kind of scary how well I did today. But anyhow, let's get back to the, okay, so charts. Okay, so let's take a look at today. So I want to go through this a little bit. I don't need to go through yesterday's price action, but you can see that big up, big down. I said that at the EMA, look for a double bottom, higher low. So that was beautiful. Flag at the EMA with higher low is you can immediately buy. If you bought above it, I don't like to buy above bars like 10 with tiny little body and a huge wick. I like to wait for price to come down maybe 33%, 1/3 of its range or 2/3 of its range, or 2's in the middle, and I look for buyers, 50% pullback. Even if I buy it, I still expect a pullback for, enter the limit order buyers there. So I didn't buy it. I put a buy order there, a little bit above the close of the bar also. Then we came down. I had a buy order right there, which I got filled. First we got here, and then went back and closed above with bar 13, and I was in. So my target was a upper 1/3 range of bar 4 first, but then I said, this is what I'm targeting. Okay, so I'm gonna make sure we go in there, and that's where I'm gonna be taking profit. And I point counted, so my swing yielded amazing results there, and you can see that that was a 20-point right there, and we extended a little bit more, went up, but at this point it's double bottom here. We need a double top. I never look for breakouts right away, okay, especially after open. If we made a double bottom, chances are we will make a double top. So sellers try to sell, they try to get a double top bear flag there, but it's no use because we're already always in long, and market is still showing you that this is still always in long, and here's a flag, and here is where I'm going to look for that double top. And in fact, we came down with 2 legs, so I traded that as well. And then I bought above 32, expected high to be tested, and I thought maybe we could get a double top there, but market failed. Now, what market did was 3 wedge top and a neckline. That's a major trend reversal. So I'm looking for a lower high, which I got, and I had 1, 2, 3, 4, 5, right? So that's the last third push in that wedge starting point. We're going to definitely come down and test that. I ended up selling underneath there, sold a little bit more, and that's where I took profits. So that was pretty good. I did not trade this. I was out. I was done with my day, but market had a really nice swing into the close, but it stopped, okay, right around here. Now, why did it stop there? Why couldn't it just get continuation? Well, first of all, it's trying to test that bar 51 low. Okay, so it was a strong bear 3 push down wedge, and it's very strong. So we know that's a sell zone, and that is the last bar. Okay, so the bull bar. Actually, the first, I should say, is first and second, but I'm going to take that whole area. And if I were actually buying, I would have probably tried to exit out somewhere around closer to the low of that bar 51, and I would have taken profit. Or most likely I would have point counted. So that's nearly 15 points. Okay, so, and just want to see if you were selling, market did not make a new trend down, so this bull trend resumes, and the bulls get nearly, actually not nearly, exactly 15 points. Okay, so there you go. And even bulls got a swing, deep buy, 15-point swing at the close. But that continued, okay, so into next day is you have strong bullishness here. So you can resume the trend and see how much the market actually gives you. So I'm looking for a 20 point. 20 point is there. Then you get a lot more than 20. You get about 30 points. Is just about, I mean, I'm not really doing a good job there, but that is the 30 point. So 30 point extra 10 points. The only problem here is that market again tried to reverse, but it failed. It's not good enough. But I want to test here. How much did they sell? No, that's not good enough. So this resumes. So I'm looking for 40 tops, and that's it. 37. It starts 40 points. Starts around 39. Unfortunately, bulls could not close in there. But we had measured move targets, so we got those measured move targets, and the market started to come down. So this is now, you can count, is 10 points. Okay, about 15 points swing scalp, and that is probably going to bounce. So that's your one leg pull back, maybe second leg pull back, a third leg, or one complex second leg right there. Okay. Hold on, guys. I love that we have humor in this Discord. Anyway, so that was good. I mean, if I didn't have this nonsense crisis, I almost lost my laptop. But I think I would have looked for a sell right around here. So there's a sell area, that's a leg, pause, another leg. So evidence says sellers are waiting there. And that's what I would do. I would probably sell underneath that, and I would look for another leg or two down. But this is where I would try to take profit if I'm still selling. That's a leg one, pull back leg two, but that's really a complex leg. So market might be going back up to, let's see, to the EMA, might do another bear flag there and get another leg down. That could give us a wedge perhaps. If we do this and come back down, there is a tight trading range here, but I want to show you guys something else. Okay, so if you actually look at the bigger picture, this area, take a look. This is a one big bullish channel, okay, bull channel. So we have a huge trading range here. So I didn't measure that, but I could do that right now. So I'm trying to find the heart of that area, which is a tight trading range. I call it an area of interest. Okay, so it was used as support, came back in, trying to break out, fake breakout. There's a wedge, 1, 2, and 3, and the bulls again, and the market, bulls and the bears spent a lot of time here. So you can see that if we start to sell really strong, I don't know what the FOMC will do, but I'm expecting a bounce here, at least at 10, 20 points. But if we break this out, say we get a 10-point bounce, if we sell so strong, close these gaps, okay, there are buyers here before then. There are buyers right there. But if we close these gaps, there is a breakout test area, which is the last week high. So we could end up coming there, bounce, but we could come here. This is where I want to see a bounce. And in fact, we might do wedge because this area is support. So bounce, come down, bounce, come down, bounce. I would look for a higher low trend reversal. Okay, so this area is very important. Somehow, if news is bad, you know, anything can happen. If we keep selling, this area is a major area of interest. I know we're going to be bouncing there, and that could be a target for bears. But this is what I'm interested for, a very deep sell. If we start again, that's, let's see, it's 44 is 2150, so it's just about 40 points, is maybe 45 points. Nothing for FOMC, it's absolutely nothing. So for the FOMC, I look for support and resistance. Okay, so for any news, the price will always respect support and resistance. You do have a support here, okay? So that's the only area that can stop, okay? And we would get another flag, perhaps, okay? So we might actually test it, bounce, go right to the heart, okay, of that expanding triangle. And then we might actually maybe either come down here, maybe buy and keep going higher without even coming down here. It is possible. So this area is kind of support. The only reason why it's support, there are buyers waiting there, but it's gap. Okay, so I'm going to measure this area. I'm going to take the whole area, in fact, as an area for market to come down and test. Let's see, that is 61.25. Okay. So we do have a bull channel. I think I'm going to start with these highs. There's a pungent smell of old coffee. It's just seeping out of the computer. And I have a keyboard. By the way, I no longer have lights on this. Oh, okay. I managed to turn the light on. That's great. Everything's working so far. So good. Okay, so I do have a channel. We have reached a 25% breakout. Well, that's 25 plus 25%, plus 50, and a measured move for the channel up. So we got a rejection there. I was using that today on another chart. So now we moved below the mid-range, midline of this channel. So close of yesterday, low of this channel is definitely magnet. And if we do break this channel, which it will be very fast with the news, okay, we'll be looking for a support. We're going to test this. We can break. We could come down here very quickly here. This is 1 hour EMA. It's always a support and resistance. So that could act as support, and it's right around where that gap is. We could dip below it and then trap and go back up. Now, if we actually test this channel, we could sell once again, because something that sells that much, it's going to want to go 33% up, 50% up of that leg, and then it's going to look to sell again. Okay, so we have magnets down below. But this is what I'm going to be looking for first, support area. Okay, so there is a expanding triangle, therefore support, and we could still reverse back and go up high. Now on these, let's talk about I want to talk about the monthly chart real quick. I know Tim Stout went over everything, so I'm not going to say anything any different than what he said, but I just want to go through this very quickly. On the monthly, we have head and shoulders, right? Beautiful head and shoulders. So we do have measured new targets to the upside. There's also leg 1 pullback, leg 2 pullback, and leg 3. So from the correction starting point to the next correction ending point is your target. But really, is the first target is August high. And we're just about to reach there. I think it's I don't know what it is, 44.55 or 44.50, something like that. So we might actually reach there, trap the bulls, and then we could end up coming down. Okay, so this could end up being one big trading range. But remember, this is a monthly chart. Like, nothing can be this quick and easy. So let's go to weekly. Okay, so a similar approach. So this is what I found here, but just to make this a little bit more prominent so you can see what I'm counting there. It's basically L's wedge with 3 legs down. Okay, so from this point to that point. So basically, this is how I found. Okay, like that. So that's 1, 2, 3, 4, and 5. Okay, so you can take that, or like this. This is how I count. This is the first correction. This is impulse 3. Okay, so this is the second correction. Cannot be higher than 2, but it could be on the same level. And you look for your third push down, which is wave 5. From this correction to that correction, I connect the highs. That's my projected bull target, but this is the target I'm interested, which is this one right here. Okay, so that's where the market is trying to go. Okay, so that is basically the last L's third leg down on the wedge bottom. Starting point is your first target. So we might actually reach there. Okay, that's where market is trying to go. And that happens to be the August 16 high. And if we take that out, we could trap the traders, and we could come right back down to the February 2nd high, okay, or breakout points. Breakout point right there is, that is May 19 high. Okay, so we could end up coming down to May 19 high. There's a gap there. We could close that gap. May 19 high is 42.70. But again, these are weekly. I don't know how far. I don't think we could end up going there. I think that's just too far because there are body gaps here. Bulls want to keep these body gaps. So here's what we could do. We could go up. We could come down with 2 legs, maybe 3 legs into these gaps and still keep these gaps open. Okay, so then market goes up. Okay, so we keep pushing higher. And if we do push higher, the next targets will be these areas, and projected target is right there. So market could make a new high, all-time high, but this area, I think it's going to act as resistance. We're so very close to it, only about 33 points, 32 points or so, and but we'll see what happens. And the daily is, we've already tested. I'm going to go over those levels in a second, but let me get rid of this for a minute. So I know it's a lot of lines, but I'm going to keep that and why that's important. I've had it on the chart for days. Now we are just almost there, but there's a trend line because it's kind of a one big expanding triangle, but that trend line was target. We're not done yet. We just still need to push this up a little bit more and then trap the bulls and then come down. Now there's also a wedge up, down, maybe up. If we come down, we could go up and make the third leg up because I believe the count begins right there. You got 1, 2, 3, and then we go up. Now if you count from here, that's 1, pull back, 2, pull back, 3. If we already made that wedge, but I doubt it because that's the high. So count begins here. 1, 2, I'm looking for a third, and then we come down. Okay, so we might come down there. We might come down to February 2nd high, is whatever. But I think buyers will be waiting there because it's a breakout test. And then we would continue to go higher to projected bull target line, which is way above the August high, right around there. What if we continue to come down instead of going? Well, there is this trading range. The heart of that trading range right here is important. Now, I also want to show you guys something else. Up until all the way to here there's no outside inside. Okay, so, and there's not even a IOI is all the way down to here. So I measure this outside inside bar, and there's actually IOI here is IOI, but it's within that range. So it's important because market could, if it starts to sell, if we get some kind of correction, I mean, we're pretty extended high, so the market needs some kind of correction. We already made a 4 to 1 risk reward there. Okay, so it's a great place for bulls to actually take profit. And here's how I found it. And that is what I'm trying to measure. I use this technique all the time on 5-minute charts, 1-hour charts, and daily. So I measured that. Okay, so this is the range right before the breakout. You see that bull bar right there? So that's the true breakout. Bears failed. We trapped the bears trying to sell 1, 2, and 3rd time. So that means this area is also going to be an important area in the future, because if market starts to come down, that's where we're going to pull into, maybe the high of that bar or right here. Okay, so but if we make it another outside inside, this will be obsolete. But you can see how this is a 4 to 1 target right there. Now we close the bar. We're still going higher. I think we're going to get to the 5 to 1, which is right there above my target. Okay, somewhere around here. I don't know how we're going to react. If we get above this trend line, we could even go higher, a lot higher. But this is still a great place to take profit for bulls, but it's a little bit more with the news would be great. Okay, so that's where I found that level. Now, in terms of last week's range, in mind is we are at a critical level and we're taking profit there. Okay, so basically it's half the range. So think of L's 50% and 100% measured move target versus 50%. 161.80 is close to 150. It's just an overshoot and it's coming down. That's all there is to it. You don't need to use these levels, but we do have a good move up, except it just very climactic. It's pulling back here, but we might need to make another third push up. Here's 1, 2, and then maybe just go up, and then maybe lower high, and then we start to come down. We might get maybe a double top here, lower high, head and shoulders pattern maybe, or we go up again and then make a much better defined head and shoulders. And then I would look for a neckline right there. If we break it, I would look for a pullback and sell into probably is this moving average, but we're so far away from it right now. Okay, so we're probably going to pull back to the 20 EMA at the minimum if we do pull back. Momentum is very bullish as long as this line is above that blue line 20 EMA. We are still very bullish and bulls have been buying, but we are kind of due. I like to see a pullback and maybe in the middle somewhere here, and then go at it again, and then trap, and then come down. It's possible, or we're just going to keep going at it, whatever the news, what the reaction is going to be to the news. It's very bullish at the moment. So a measured move target for last week's high is right there. Bears want to bring it back to the last week's high. It's on my 5-minute chart. They want to bring the market back to here, but it's still going to act as most likely support because it's a breakout test. Now, there are a lot of, why would market sell? If you actually look at the 1 daily chart, okay, so let's go back to that real quickly. What time is it? Okay, so we have plenty of time for the news. So let's take a look at this. Why would market take profit here? Let's take a look. Okay, so people bought here. Okay, so they might even have bought here, but then they got disappointed. They bought again, and they got a measured move here. I'm sorry, break even there. Or if they kept it because we're making higher lows. Look, this low is higher than that low. That low is higher than that low. And that high is higher than that high. So we have these minor highs, but we're making relevant to this high. We're making higher highs and higher lows. So we're in a bull channel. So it's going higher. That's because there are a lot of bulls are stuck here, and they bought here. They had a break even. They want to get back to their original entry price, and they want to make money with that. In fact, they actually want to go higher. So we might actually get the 5-2-1. Can we get a 6-2-1? I don't know. We might. But if we start to come down, that's because we would test this area. So these bulls bought here, they would make money, or they would be satisfied that we have come so close. If they start to exit out of the market, then we could start to come down. Okay, so this area right here, that little pause, leg 1, pull back, leg 2, pull back, leg 3, that pause area, buyers are waiting. Even if we pull back there, there are a ton of buyers waiting. It's going to bounce us to the upside. Okay, so I wouldn't be too excited about selling, even if it sells. This area, there are buyers waiting. Okay, so. But if we do sell, that's because those bulls will be, taking profit most likely. All right, so on the Globex, let's take a look at the Globex section. Market has been very strong. We're making new highs. Even the wedge top sold a little bit, but breakout test area, we bought again. We made a higher low. The pre-market Asia session is small triangle, tight trading range generally gets a major breakout in London session. So it's always in long bulls, big breakout. Okay, so I'm going to also show you guys a technique, how to trade the open if you're interested in, if there's any time left. But obviously that's London open. You see something like that, just buy above it. And then look for a measured move and look for a 2-to-1. Okay, I think this got like a 3-to-1 or something, but let's just measure. Let's not eyeball it. So that's 1-to-1. That's 2-to-1 is London session. Now into US session, I still use the Asia range projected to up or down. That's a beautiful 3-to-1. This is how I trade the Globex. Somebody asked Tim Stout if Globex session is any important for him. He does use it. I mean, I'm sure of it. So, but just to answer that, from my own perspective, it's an important level that shows you what the London session is doing. Even the pullback, okay, it was so deep, but if you had a stop, your stop was never taken out. You take profit at the 2-to-1, right? So that's not 2-to-1. I'm sorry, measured move. That's what I'm trying to say. So you take profit at the measured move. Okay, you can see those wicks. It started to come down. Then it made a wedge bull flag, but the bull flag did not break out. It made a lower high, failed to take out that high, and it came down. So you got an M pattern, double top. When I say M pattern, that's double top neckline. If we breach that neckline, that means expect a bear flag, expect another bear flag, expect another bear flag, and then you expect a reversal. So you get 1, 2, possibly 3, and a failure. We go right back to that. First, you take out profit there, and then you look for a pullback, and then you add in more contracts. So you go in with half size and a full size. Okay, so we might even go right back there. So look, M pattern. We did take out that low, not the strongest one, but that's your first flag. Second flag, we did not make a third flag because that is a Asia session heart right in the middle. Okay, so that's another technique. I'm going to add on to that Asia, why it's important. Okay, so Asia mid-level. Asia, okay, things are weird happening, and oh no. I'm scared. I think I'm just very jittery. I didn't have lunch. I missed the lunch, so I didn't eat anything. And there's all that adrenaline still trying to settle, and my hands are shaking. Now that I smell the coffee coming out of the laptop, I guess it has a side effect. So I apologize. I'm clicking on things twice and 3 times and nothing's happening. That's just completely user-generated failure, nothing to do with the application, so don't be scared. Anyway, so but you do see that M pattern. They have sold, and there's a wedge, but that's right there. Asia mid-session, that yellow, and this is US session midnight, brand new day at midnight opening. I measure that, which is this bar. Okay, so midnight. That is a key level, and I said it early this morning. I said, I'm selling this into that level, but I'm taking profit. I don't care if it actually breaks it. What I'm going to do, if it breaks it with a bear body, I will look for a pullback, and then I will sell the next bear bar, closing strongly bearish. Then I will expect possibly 1-to-1 to the downside, or at least half, okay, R, and then trap and go right back above. Then I'm going to look to buy. So I said, I'm taking profit here. I'm not selling anymore. And then the bar closed like that. I said, oh, that's just the always and long, pulling back, finding more buyers in the Asia session, and going right back up again. So we made a high. We made a high. We pulled back. We took out that low slightly, but we did not take out that low. That's still bullish. I started buying above these bars, and I went long, took profits. I sold a little bit, and I almost destroyed my computer. So Globex session is important. If you know how to read it, it can make it or break it. It can give you amazing swing setups. Measured moves, I get it from there also. But anyhow, so I want to talk about, there's a little bit of time here. How do I trade open? People ask me all the time is, what do you do? Well, if I'm trading RTA charts, 5-minute charts, I do not take any trades before the first or the second bar close, especially I look for 2-bar closes to get an idea whether this is a trend from the open or it's a limit order open, that it's going to go sideways, up or down. It's going to trap the traders who are trying to sell the closes or buy the closes. That's what I determine. But if I am on an ETA chart, okay, so how do I do this? Let me open a chart real quickly. I do not trade. Oh, do you start trading at 2 a.m.? No. There's something called sleep that we kind of have to have in U.S. But when I can't sleep, there are times that I don't really trade at 2 o'clock. I look at between 2:30 and 3. So what I do is, if I'm going to trade the London session, what I do is I look at the market. How is it reacting to the Asia high and low? And I don't buy and sell the first breakout, because London session always traps the traders at the high and the low of Asia range. Okay, so look for that trap, let them trap everybody, and it's going to show you exactly which direction it's trying to go. And that's the one you want to take. And it's really good if you can actually study that behavior. You would do really, really good. Okay, so just give me a second. There's still time here. I'm going to show you guys this very quickly on a very naked chart, but things are not responding. Oh no. Maybe today is not a good idea doing this. I could perhaps do that tomorrow, but just give me a second, maybe I can. And delete everything. Okay. Here's what I do. This is an ETA chart. Okay. Actually, no, it's not. You need an ETA chart. Very simple. And many of you probably already know this. It's a 1 minute. You can use 1 minute, or you can use 5 minutes. I'm a 5-minute trader, so what I'm going to do is get that. Okay. So what I do is I wait for, before the market opens, I do 2 things. Okay, so I wait and wait and wait. All the ways, maybe like is 10 minutes before the open of market, or half hour, whatever. So here's market, right? So now look at the structure. Okay, so I'm going to put it right there, 9:30. Okay, put it right there. So I'm seeing a structure here. What I do is I box it, box this. I box that high, but before then there is this high. Okay, and then I have this low. So here we go. But before then, there's that low. I don't need to take the biggest structure. This is all I'm looking at. Okay, so I need to see where market is in terms of this structure. It's a trading range, and here it is, right? So this is, I'm gonna get that out of the way. It's actually too big. Well, that's not going to work. Okay, so imagine that line, right? 930. So here we go. That's the 930 bar. So what happens is, basically, I'm looking at this. I'm not seeing any of this. I'm going to make that white. Okay. I'm not seeing any of that. All right, so this is the last bar. I'm in the structure, and even here, there is a little bit of upside move, but then we come down. We take this one out, okay? So, but we're going sideways. So I can't really buy and sell unless I see the very first bar, okay? So open and close. This is very difficult to make a decision. So the first bar, okay, is a big bear bar. Okay, so it's taking out this right there. It's basically, it's going to come down. I see this. We're not able to take out that high. If it was a bull bar like this, I would have bought that right away. I would have probably get 1 or 2 points and see if we're going to take that high. Then I would hold a runner. But we got this. So I'm going to sell that right underneath. And I'm looking for a couple of points. Market gives me is more than enough. Look at that. That is 6 points. Trader's profit on S&P is 1 point. You can look at the ATR and gauge how much it's going to move. So you can take half of that, scalp it, and leave a runner, right? So if it says 5.5, go for 5.5. It goes 6, you already made money. So you scalp the 2.5 or so, or 2 points, and you leave a runner. And if it keeps going down, you're making money. If it doesn't, it's going to come in and hit your, break-even stop, and you're out. So there's that. Okay, so that's how I trade. Now let's take a look at the next day. So here we go. Where's my? Oh, I have deleted that. So let's do that again. Where is 930? Okay, so I'm looking at a structure, right? So I'm gonna close this out. Okay. So I'm looking at the structure here. Is that 930? Nope, that is the last bar before market open. The market's telling me, we took out that high. Look, if I box this around, we are bullish, and that is the low. But there's also that low. So this low is important. If I see a bear body taking out that low, I might be inclined to sell, right? So let's take a look. But if I see a bull, okay, bull's taking out that high, I'm going to be buying. So market opens. I have a bear body, but it doesn't take out this low. Do nothing, because this is the high and the low that we boxed. Okay, so I'm interested, but it's not good. Not going to sell it. It needed to take out that low with a bear body. It didn't. Look what I got. Now I'm going to buy above that. You buy above it. You're looking for a 1 or 2 point, whatever the ATR, you could grab that half. You're looking for continuation. Beautiful. Now, if I actually add the ATR, I'm going to make it a little bit complex so you can find. ATR at that time, right there was 450, right? So what's half of 450? 225. So let's get that out of the way. If you bought above that, you're looking for a scalp 225. You scalp that 225 right there. Okay, so you got it. Now you have a runner. All right, so what are you looking for? Now the next bar, ATR can go up or down. You're going to have to adjust your expectations of how much you can take from the market. It's 4 points. So it's telling you this can go is give you 4 points. Okay, so basically it already reached 4 points right there. When I see 4, I try to grab like 375 front run 1 tick. I don't need that because ATR, but it can go twice the ATR too. So now what? Okay, so it's keep going. That's great because ATR is going higher. Look, 447, that's 450. 471, 49, 495, 5, right? So ATR is telling you this is going to go 5 points at the minimum. And then it gets to 5, and then it starts to come down. So if you haven't taken a profit with your runner, you see this bear bar, exit. You're done. That's how you trade. Well, where would you put your stop? Your stop, you can do 2 kinds of stop. You can use the ATR value, 1 time the ATR value. Okay, so you're doing a quick scalp at the open. Okay, so you're basically in and out. So what you can do is you can use 1 time the ATR. If you cannot afford it, then think about how much you can afford. You know, if you're trying to make a 2 point, maybe your loss should be 2 point. Okay, so since you're in scalping ATR, the risk reward is completely opposite of swing, right? So your risk is twice as much as your reward. And that's how Al teaches. So you can take a look at, if my initial scalp is 2.5 points, maybe my risk could be 5 points down below where you entered. Okay, so if it comes to this higher low, that's great. But if it's too much, big bar, big risk, you're in a scalp mode. You're grabbing and going, and you have a runner. And right after that, you can actually move your stop once this bar closes bullish, maybe right exactly where you enter to break even. Even if it comes down and takes out your break even, your runner is not running. But at this point, your runner even gave you a good price. Sometimes it goes on and on and on and on. You get a really nice swing. But I treat this as, this is great. I'm going to go in. I'm going to grab 1 or 2 points with really, you know, several contracts. And that's my trade, the open, until the first 2 bars open and close and tell me whether I have a trend from the open as I'm looking at the RTA chart on another monitor, but I'm trading the ETA chart. RTA chart will give me more information, whether it's going to be trading range or breakout from the open, trend from the open, so and so. All right, so that's it. Is there another one we can, let's see. All right, we have 8 minutes left. I want to actually, you can do this exercise yourself, but here's another one, right? So 9:30, I'm just going to do this very quickly. And then I want to look at the FOMC charts in Encyclopedia. So 9:30, so it's going and going and going and going and going. Okay, here we go. So this is, okay, so unboxing. That high is that low, that low. If I get a bear body closing taken out, I'm going to look to sell. If I get a bull bar, I'm going to look to buy. But it's a TR, so it's a trading range open most likely. It's a trading range open. Now, that bar is 9:30 bar. Technically, it's a bull body closing, but it's not good enough. But this one's good. That one's good. The only problem, again, is testing the high of the trading range. Do I want to buy it? It's got a big wick. I don't know. I might buy with a limit order if I want to buy it. Maybe I can buy that close, and I could put a buy stop order also there. So say I bought that close right there. I'm looking for, okay, scalp. What happened? It went up. It didn't really enter, and it just came down and closed here. I could do 2 things. If I bought here and I have a small stop, I can exit out and take the loss and be done. Or I can stay in my long, put a stop here, and expect, okay, continuation. This one's a loser. You lost. Or what you can do is you do not do anything. And here's what I do. I don't once I see these trading ranges and we did not take out that high and we did not take out that low, I do not touch any of this. I don't. But if you do buy this, market went up and gave you actually a little bit of profit there as it goes up. In fact, we can actually measure it. So you enter it, right? So what is it going to do? It opens here, it goes up, then comes down, closes here. Technically, it gave you is profit there, but then it lost. It's because you weren't quick enough to take it. Now, I can trade that open, I can buy that close, and my stop would be probably equal to what I'm trying to make. So let's take a look. Okay, so that bar says 362, 350, half of that is 1.5. Okay, so basically you're scalping 1.5, and then you're looking for three points. That's actually profitable. So you make money. Okay, so and then this comes down. You make money right there. But look what just happened. Look what the bears did. Bulls did not take out that high, so there's no bull breakout. You kind of got the idea it's not going to go higher. Look what's just happened right here. Bears took that out. So what if you sell the close of this bar? You made money, and then it comes down, and it goes up and closes there. But if you actually sold the close of that bar, because it kind of gave you that, okay? So you entered right there, and then right there is 483, so that's 475, 225, maybe, yeah. So let's see, you're going for a 225. Is 225. Market gave you 425, 475, and it kind of right there. That's 5 point, and ATR started going up. This came down, but all you got was that much. Okay, so market did give you is profit there. You could put your stop there maybe above that bar or whatever you can afford. But right there, you're scalping. So that was profitable. So test this out and see if you can actually trade with these very basic rules. It's all rule-based, okay? Box it up, that range, the very last high and the low, and see if you can actually trade down. All right, let's go to FOMC. Hopefully this was helpful. Get this question a lot from people. It's not part of the L. Brooks teaching, so I don't like to share everything. That could confuse you guys. Not that I hold on to information. I don't. I'd love to share everything I know. If I can be helpful to anyone, that would make my day. But if it's not within the scope of the course, I sure don't want to confuse anybody. But I keep getting these questions. How do I find my direction at the open? How do I do this? That's how you do it. All right, so for those of you just joined the trade room, we trade with L. Brooks methodologies, and so if you have not taken the course, sign up with the course. It's $399, and after 60 days of your course access, you will be eligible to get access to the Brooks Encyclopedia chart patterns, which is only $199 for lifetime access. Now, FOMC, there are more than 4,000 charts that team L. Brooks manages, and these are all L's charts. So I'm going to go to the FOMC section. Everything's organized under alphabetical order. Possible outcomes, 40. Let's take a look at, okay, so we have 1 minute. Look at this, up, dips down a little bit. Let me get this out of the way, although I don't want to, but here, let's keep this clean. All right, here we go. It's coming up. Trade small if you have a small account, because the move is going to be epic. Hopefully my data connection is not going to fall behind. If it does, I'll switch charts very quickly. All right, so here we go. Just checking my data connection, 442150. Here we go. This one is, I don't think that's us. We went up. Say we could trap and come down. Here we go. That's a bear flag, by the way. 1, 2, 3. Wedge top bear flag. We might just go and test the 32 low and then sell. Okay, so that is a bear flag, everyone. Okay. News bars will be in search of support and resistance. That is a bear flag. Okay, so, but there's also a bull flag. 1, pullback, 2, pullback. We're trying to make the third push down. We might actually trap the sellers. Be careful there. Okay, so there's a measured move here. There's a measured move here. Remember what I said about that channel break. Okay, so there is a buy zone here. Very last bear bar. This is a buy zone. We are going to test this. There are buyers waiting here. But there's a wedge here, wedge bull flag. Ah, that's it. We're coming down. Here we go. There's no change on the rate. Okay, so 4409 is measured move target. We should test that. We might test this entire area, including bar 61 high. First buyers are waiting there. Okay, so I like to see a test of this zone. So that's not this one. Am I behind? Yeah, I am. I think I'm behind already. So it is 4407.75. Yeah, I'm 5 points behind. But when did we test? We tested the 4401 almost. Right? Am I right? 4400. So we came all the way here. So we tested my 1 hour EMA. I'm going to try to reset this. Yeah, I'm behind. But look what happened. We tested this. We got the measured move. And we tested the 1 hour EMA. 1 hour, we even actually literally touched it before moving back up. Now, it's still coming down. So they're trying to break below this. That's because there's a gap here. Bar 10 low, we might actually come down. I don't know. Low of yesterday. There's a gap here. So this bar is still coming back down, even though it bounced. It found support. It bounced. Now it's come back down. Let me try to fix this. I'm reading from Thinkorswim and TradingView charts on 2 different devices, just to make sure that I'm not missing anything. But there is a wedge here, bull flag 1, 2, and 3. So I don't know if this area is going to hold. Right now we're coming back to the 1 hour EMA. If we, let me get this out of the way. If we break below that 1 hour EMA, it is possible that we could continue into this area right here and close the gap and overlap with close of 2 days ago, actually. All right, so let me reset this. It's got a little bit more, 43.96. Could come down to 91.75. I'm going to try to kill this connection and get the other connection. All right, so we tested the 43.96, bouncing a little bit. If we break below it, we could come down more. It's in search of a good support. Wow, it's so weird. This connection, I'm using Rhythmic. It won't even turn off. So I just have to wait a little bit. It's bouncing right now. It moved underneath the EMA. And it actually, I think it tested right here. So 42.95.50 was the top of that. We tested 43.96.50. We tested, I'm going to get rid of this. Okay, so get rid of that. So we tested literally 1 point above this level. Just 1 point. I could have also done this. Maybe take that. That would have been exactly maybe just a little bit inside. So we failed to test the low of yesterday. Most likely we might test it. So let me get that data connection established, and that should fix everything. So we have tested this area, but I'm still going to use my original level because we are going to come into this area. So this is a major, okay, so close the gap and overlap with this area. This is a major area of interest. I think the market is going in here. It is right now 96.75, 95.75. So we just tested one tick inside the zone, and that's good. It's held a close at the moment, and it could sell even more. Okay, so did I catch up here? Nope, not yet. I'm just waiting for a chart to update, and it's taking its time. I don't get this all the time. I went through some Windows updates this morning. I don't know if it fully, done the update. Sometimes I get these major connection issues, or the application freezing on me if Windows is not up to date. Lately, it's been every day. All right, so this has continued to come down. Like I said, it's going to sell more. It's trying to get to 43.80, 43.75 area. This is what I'm interested in. Take a look. You see that open of the week? We could end up pulling all the way down to 43.60, 43.55 area if we break this. But there are buyers here waiting. Why is this not updating? Yeah, I think it's finally froze. I'm sorry about this, guys. I mean, today has been so weird. Things just went haywire. Okay, so finally it's responding. Just give me a second. Here we go. See, weird things are happening. It should start to update. If it doesn't, I'll just kill this workspace and then open a brand new one. Yes, it is. Sell to close. It's in search of, here we go, is support and resistance. It closed the gap. It's in this area. It could continue to sell very strong. There is now a brand new, excuse me. We already got that. So I'm looking for now for this. Take that. Okay, so that's the measured move. Or I can even take this. Okay, so right there. And that's the follow through measured move. 80, what is it? 43, 88.50. Okay, so I kind of caught up. No, I'm still behind. I don't know why it's falling behind. There's nothing I can do about this unless give me a second. It might catch up in a second, but I don't want to wait because I want to trade this. It's going to reverse eventually, and I want to be in that reversal. 93, 85. Nope, just give me a second here. I'm going to switch this up. So yeah, I'm killing the workspace, and I'm going to open up a brand new one. But meanwhile, okay, so it is bouncing a little bit. depending on where this body closes. If it closes on its mid, there might be more sellers. Okay, so it closed on its mid level. Bar 57. Let's see if the bears can continue to sell this. It is still very bearish at the moment. Okay. Just give me a second. I don't even see the bar 57 on my chart. Bar 56 closed very nicely. I like to see more bear bars. So it's pulling back a little bit to the high of 56, probably sellers there. So you should see a, yep, so that upper wick of 57, sellers immediately sold or a bunch of sell orders hit. But if this bar 57 closes lower than the 56 close, then we could continue to come down. So here we go, back to normal. Okay, so it's working now. Okay, I had a backup workspace. Okay, that 56 closing on its mid level is, I expect bears to sell the pullback, which is at the high. So this would become the upper is 1/3 of that bar to the wick becomes a sell zone. Okay, so that's why I said there are probably sellers waiting here, and they're going to sell right there. So bears need to take out at least half of this lower wick of 56 to continue selling this, and then we have targets. So this would have been my 1-to-1, and then I can even go for 2-to-1 target right there, or I can even do this, but that will be 2-to-1, so I just have to adjust that. Bears need to keep closing bear bars. There's no support here other than right there. So this is still support, and this is the reason why we bounced 56. I did say this area, once we close the gap, this gap is still open. We need a body, a bear body, overlapping with these 81, 80, 79, and 78 bodies. Then I could say, okay, the gap is closed, and we could continue to sell a little bit more. Well, we would bounce because this is spike and pause, and another spike and another pullback, and market went up from there. So this is basically support. Now, if we do close a bear bar, and if we do take out the 56 low, and we get to this measured move, okay, that means we can actually continue to come into this level. This is the level I'm more interested. This is where I want to buy. So I need to put an order in. I was waiting for at least 3 bars, 15 minutes to pass to get a direction. Okay, so here is your first 5 minutes. Here is your second 5 minute. And here's your third. So you got 15 minutes here, and but that bar has not closed yet. So the direction is to the downside, and it's still very bearish. I don't want to buy anything here. I don't want to go against this until it truly finds some kind of a support. and starts to close bull bars. I have no idea what .NET framework or how it would be up to date. That right there is a whole different language that I don't know how to speak. Gordo. I don't know. But you guys can help me after hours. That's most welcome. All right, so let me check my data connection. 9450, 94. Yeah, I'm up to date, so that's all good. It's still resistance. We might need to test one more time, make a double top, and then come down. It's an outside, inside, followed by another inside bar. Could it be reversal? Can we reverse back up here? Some bulls will buy the close of that inside bar 57, looking for a couple of points up. Since ATR is about 975, they might go for a 4-point, but I'm not going to do that. That is not a good place to buy. It's an inside doji. To me, that's continuation to downside, unless I see a better, bull pressure or a buy signal bar. We have inside, so you have a mother bar, outside bar 56. Its high and the low becomes magnet. There are buyers, okay, towards the 1/3 of its low range. There are buyers waiting. There are sellers also waiting 1/3 of its upper range and above bar 56. Buyers, sellers waiting. So it's very difficult to do anything. It's to the downside. We're always in short, right? In a big trading range. The market is going to continue down a little bit more. It needs a double bottom or something. Maybe test for the second time before even looking to buy. I'm not interested in buying this yet. So I want to go back to encyclopedia. I think we're coming down to the last week's high, which is a magnet. Even the 50 EMA right there, we might thoroughly need to test that before bouncing. So market could continue to come down here, and we could keep selling this, especially if we take out the bar 56 low. We could end up coming down to the measured move and furthermore down. Now, if you measure your measured move this way, or just take the 62 low, that would put us right around here. So big bear bar is we were above the EMA, moved under the EMA. We didn't really, well, we did kind of did, but really the first bar is actually a bullish bar. We didn't have that. So think of this as a leg 1 pullback, leg 2, or leg 1 pullback, failed leg 2, and then we reverse. This one we immediately reverse, so that's not us. We're coming down. So here we go. We move down and gap down. And I said this is a bear flag. It's looking for a double top and sell. And we did sell right there. We're going to get back to that. That's actually kind of a triangle. Eventually, we will come to that triangle where we sold. We're going to get back up there eventually, either today or tomorrow. But first, we need to keep selling this. Okay, so this one is not us. That's a bear. So these are sell to close, small pullback bear trend. Ours is a lot more violent. I expect more bearishness. That's why I said I'm not interested in buying this. Is because if we break this support, it needs to test it for the second time before I look for buyers. It is testing. But if we break the support, we continue to come down to the last week's high, which is 69.25, and right underneath is 50 EMA, which is a major support. We might need to test that before we even bounce. Okay, so there's that problem for bulls. That's your bear flag. Is I warned you about. That's your big impulsive sell. That is your bear flag. Let me extend this a little bit so you can see it. That's your bear flag. 1, 2, 3, 4. 1, 2, 3, 4. Okay, so think of this as a 2 legs. Okay, so instead, we could actually come down and test this low and reverse. This one had a one big pin bar and just moved up very quickly. We're in the second leg in a way, so here's your pullback. We're in the second leg. If the second leg fails, we get a strong bull bar. I don't know if I want to buy it, to be honest with you. We could go up and test this right here, this resistance, make a double top, and then have a flag and come down. This is right now a basically triangle. Basically, it's a flag, okay? So it's probably going to sell more. We did not have this. Beautiful. So here we go. But they failed right there. Here is leg 1, bear flag, leg 1, pullback, leg 2. It found some kind of a support. So did we, but I don't have a good buy signal bar here. I am not interested in buying anything. It's going to sell more. It's looking for sellers by pulling up, because if you're moving into a support and you try to sell at a support, that means you're selling too low. It has to bounce, okay? Like you're trying to jump over a, I don't know, like a hill, right? You can't just, hey, I'm jumping. That's not going to happen. You're going to end up at the bottom of the, ravine. So you have to back up a little bit and then jump, get some momentum. So that's that momentum. It's just backing up a little bit before coming down, so they can go further down. Okay, so they need that pullback, a better price to sell rather than selling too low. No bear wants to sell too low. They want to pull back and get a better price. So that's right there is not buyable. I'm expecting bears to continue to come down, take out the 58 low, take out the 56 low, further move down until they no longer can. So what we're going to do with this is down, up, down, up, down, and then I'm going to look to buy, okay? So until I see that, I am not touching. This is going to keep selling. Just like here, take a look. Down, up, down, up, down. There's a micro wedge there, and there's a bigger wedge before it goes up. So we haven't even set that up yet. We need to take out the bar 56 low. Your stop is where's your stop? I guess you can't put it up here. That's ridiculously high. So if you lowered your stop here, right? So you kind of, if your stop were there and you sold it, you got a nice measured move. Now your stop is here. You're looking for continuation down here. Can you put your stop here? The problem with putting a stop there, okay, so you can put your stop there, even you can put it up here, is that we didn't take out the bar 56 though. But we did take out that with a bear body. So it is okay to put the stop there. I would do that because it's too risky to have a huge wide stop in case this reverses, but it probably is not going to. So the moment this actually takes that out with a bear body, okay, so then you can even lower your stop furthermore, okay? Because this body closed below that, to me, that's okay to put the stop here and look for continuation now. You can lower it above 59 if we take out the 56 low with a bear body. How do you know I'm not shorting? I have not shorted. I am sorry. I have to be honest here. I am so scared about this data connection issue and with what's happening. So Red Dunlop 999 over here. Are you talking to me? I think you're talking to me, right? I assume you're asking me that question. If it was somebody else, I'll just talk about it anyway. Okay. So I'd rather to talk about it I made quite a bit of P&L today. In fact, my P&L is in 5 digits. Okay, so I'm very excited about that. With all this going on, I think you didn't see what I did with my computer. I almost lost my computer today. So, and then this data connection scared me. It is fine right now, but I'm just a little bit nervous. I don't want to give back, but I can see where it's going. I rather read the context to you guys, and you can trade it. I already made my money all morning. I don't really care about this, but I will want to buy the reversal, so I'm going to wait for that. Right now, we're looking to take out the 56 low. Let's see if we can. FOMC days are my favorite days. When things go wrong, such as dumping my entire 16-ounce coffee on top of the computer, and I had to actually open it up and clean it, and you can watch the videos. That already, I'm shooken. I'm just scared about it. Something's going to go wrong in the middle of my trade. And then the data connection really scared me. So I just rather to sit back and let this go. There's also tomorrow, which is the third part of FOMC. The second part hasn't even started. There's the 2:30 when the Jerome Powell starts to speak. We're going to see more moves, so I'm probably going to jump in with the 1 or 2 contracts. Then I'm just waiting for 2:30. So it's going just fine. Knock on wood. Yeah, I would recommend you, because what happens is this is still a support and the bulls are looking for a second test and a bull bar. We could still go up here and make a double top, but the distance is too long, and that's a lot of points. So if you don't want to take a risk, you can actually take profit, right? So, and then sit back or trade small. I think we're going to sell more, but we did not take out that 56 low. Now, if this bar closes like this, there will be buyers above that bar wanting to jump in, or at the close of a strong bull bar. I'm not going to buy this because I don't know how it's going to close, and we're just around. There's less than 3 minutes left for the second part of the FOMC. Especially with Jerome Powell, I don't want to take a risk. So I'm going to wait, because to me, this is not a good double bottom, and this is not a good neckline. I like to see down, up, and down. I like to see a third push wedge before I buy. So I'm going to wait, because market will give me that right there, up, down, right there. Then I will buy a bar like that, or like this. See, down, up, down and up in one bar, and then comes down for the third push. That's a micro wedge, and then beautiful bull bar you can buy. There's a small flag. It goes right back to that triangle right there. I can hold. We might even go further up high. I don't know that yet. So right now it's still bearish. Here's another one. You see, it's in different shape and form, but it does exactly the same thing. You see what happened before? We did not take out that low. We did not take out that low. So we're going up right now, but if you buy this and the Jerome Powell says something to sell, we can come back and test this low, which we will, and you'd be scared out of your wits, and you do not want that. But they did form a really nice neckline there. So basically it's a W pattern with a neckline. That I don't mind buying, but I want to see 3 push. One of them is an undershoot. The other one is an overshoot. This one is overshoot, but this is an overshoot of that. Then I don't mind buying again. But even if I wait 3 bars, I can still buy and make money. But I don't want to risk it right now. It's just 20 seconds left or less. Yeah, I'm going to upgrade my computer. I'm going to get a desktop or something. I don't know yet. Bears disappointed is they were coming down, disappointed, so they sold again. Now they sold underneath or the close of 59, disappointed, so they will look to sell again. And let's see if we can actually come down one more time. Everything's going fine. Right now the computer is working. Making 10 points up or down is extremely easy. So average swing is 20 points now. Okay, it's trying to get a 15 point here. We might need to get back up here or get back here maybe. I don't know if Powell would make us breach this resistance. It's still going to act as resistance, and bears are looking for some kind of a double top to sell again. Okay, I am not going to buy this. If you do buy, you need to see a second bull bar. Say you took profit right here. This is basically the second buy signal bar. This is a terrible one. Okay, so they tried to buy the close, but they only were able to make money just a little bit because it's a bear bar and this area is always resistance. But this is the second buy signal from a strong support, but they need a second bull bar. If this bar 61 closes bullish, market is going to quickly get to the 43.98 and scalp there. Okay. I'm going to try to trade, but I'm going to switch to micro. Found it. See, this is why I didn't want to buy, because we did not make that third push down. Plus, what's going on with? Can you guys hear anything? Because my news was turned off, so I couldn't hear anything. So I'm trying to turn it back on. Voice stream is currently down on what is this? Financial Juice. That's why I'm not able to hear anything. They have a problem. Okay, Fed's Powell. Some further rate increase is likely appropriate this year, he says. So market is going to react, but it's looking for a double top, either with the 58 high or 57. So it did go to my target. Now it's trying to go higher, but probably sellers here once again. Be careful, because there are disappointed bears down here. So what they're going to do is they're going to wait for 10 points, 15 points, 20 points to sell again. Okay, so if you actually measure from here to there, that is a 15-point swing. It could go a little bit more, maybe to 19 or something, or they're going to start selling and try to get a measured, break even. So everyone sold here at the high of 58, and that's their break even, or they're going to look for a bear bar and they're going to sell the close. So right now, any machines who sold at the high, okay, of 58, trying to get a break even. It needs to tag this blue line right here. And that's a machine's getting a break even right there. Needs to close bearish for us to come down and test these lows, the low of 59. If it doesn't close bearish, it closed bullish. Bulls could close another third bull bar. That's momentum. It could bring us to the 20 point. And I think that's what they're trying to do now. Let's see, if they close that bar bullish or keep buying, they're going to try to get to 19 to 20 points, which is right here. Again, I don't want to buy this because we have a double top here, which is a bear flag. If the bulls get 3 bull bars, okay, with bull bodies, then they get a momentum, then they can easily push up here. And taking out these highs, we would take out the stops, and we could end up getting right back to the 50% of this move down. So you saw how these bears broke even, and if they already exited out the market wants to get to the 20 point. This is still 15 point. That means we need to close a bull bar 1 tick above bar 61. If we do that, bulls are going to try to get a breach that bull bar's high. And this is why I said it could be dangerous for putting your stop here, okay? It's because we did not take out the bar 56 low. Now, if you would put your stop here, right? It's because we took out that low. Now, if your stop is there, or 50%, somewhere here, you're still safe. But market is trying to reach 20 points. And if they're already reversing like this by buying above this, they're most likely to take your stop. So your stop is not safe there anymore. It has to be somewhere here or up here. But you saw how the bears exited out. If you didn't exit out and you were still bearish, you're getting slaughtered here. They're taking out your stop. And because they wanted to get a 20 point. I did say that it's very easy to get a 10 point today. So your average swing is 20 point. And the bulls just got that. Okay, so that is very problematic, but it's still a double top in a way. Now, if this bar closes bearish, anyone who had stops, they move those stops to the 50%. Okay, so somewhere here of this body. And they get a bear bar close. Okay, or they start to sell. I wouldn't sell a bull body closing on its high like that. I would look for a bear bar if I'm still down here and holding. But in an FOMC like this, it goes about 20 points against me. First of all, if it goes 10 points against me, I'm exiting out. I have a chance of making that 10 points going the opposite way. No one's going to hold 10 points. Okay, so retail traders, only the big guys can do. But even if they're stuck here, they don't see a bear bar to sell. So they're going to hold. But they can put their stop all the way up here. I can't. So I see how I measured the bears actually did come down and test it and then went up. I'd be exiting out. That's it. I'm breaking even with those guys, and I'm going to put a buy order right there as this bar goes up, fills me, and I'm in. EMA is target. 50% of that gap bar, 55 is target. 20 point is just about target, and you have to scalp. Is this what we're having? Maybe. One, again, pull back. Maybe this was the third push. I don't know. But we have 3 bull bars, and we kind of broke this resistance. It's no more. But if you actually measure from there, so this is the FOMC. This is the FOMC. So you have, we already tested the 50% of this move down, and there were sellers there, okay? But in order for these stock bears to exit out, and if they sold here and they were stuck, say they sold there or maybe underneath, so I'm going to use the bodies. They sold here, their break even is right there. So they're desperately waiting for a market to come down and test that level. So if anyone hasn't exited out, they're looking for a pullback. But like I said, I would never sell a bar 62, a strong bull bar, close like that, assuming is, I'm going to be able to exit out. No, it has to be a bear body. So since they don't see it, machines don't see a bear body, they're not going to sell, and they might even wait for that. If that body is somewhere up here, they might sell that. So I ended up buying on the micros. Once I saw those bears exited out, I immediately bought, and I'm making money. I want to see a test of possibly the 50% of, let me get rid of this. If I measure this big gap bar, okay, the 50%, we've just tested it. And I just took profit there, right there, a little bit underneath, right around the EMA. It kind of overshot and got that. So I'm flat now, okay? So this is good news for the bulls because they now have 4 bull bars. It's also 20-point swing, so it is okay to take profit. Can it go further, more higher? Yeah. Market is trying to reach this triangle area, tight trading range. There's sellers probably waiting there. But if this bar closes bearish, then the machines might sell it and looking for a break even. So let's just wait. Are we in always in long? You have 60, 61, 62, 63. If this bar closes above 62 and at and above the EMA, we can become always in long, but there might be buyers waiting to buy the pullback. Even if we don't close, then we get a second leg up. But you see how they become always in long and kept buying and buying. Can we get that? Yeah, we might get that. Ours is not as good as this. Define here that reversal, but here's another one. Okay, so we became always in long. We went right back to that triangle. This is where the market is trying to reach. We did not get that. We didn't make a new low, but you can see how we became always in long. And they ended up buying every pullback bar starting at the EMA. Small flag there. And it's a small pullback bull trend it became. And it ended up giving you a measured move. Okay, we went and took that flag area out, and we got just about a measured move to the upside. Can we get that? We might be able to. We had a gap here at the open. After the open they have a gap here, and it came down to the EMA. It moved under, so that's basically what's happening here today. All right, so it's still going. It's trying to reach the bar 52 and 49 lows, or the breakout point 54. It's going to need to test this tight trading range area. We are now always in long. It's a reversal now. Good job, bulls. I took profit. I'm still flat. I didn't enter again because sellers are waiting here. They're going to take profit. I don't want to buy into that because if I buy here, my risk reward is ridiculous. So it's just I have to be happy with what I have. I can wait for a pullback and buy that one. How would that work? I would wait right here, and then I would look to buy, just like here is maybe right there. So that means this is where the market is trying to go. Okay, so we're going to pull back, and that pullback could create 2 legs up to get to here, maybe even the high. I don't know if we're going to be able to take out that high. Now, what happened to my measured move? I am no longer interested in that. That is too much of a pullback and a rejection. So now we're pulling back to the EMA. Is probably buyers waiting there at the EMA. Disappointed bears. If they sell here, oh boy. I mean, I measured it pretty accurately there with that bar 61. You really needed to get out with that bar 61. It gave you the opportunity, and it was pretty accurate. Now what? Can it come down? Probably not. We have body gaps here, so it's probably going to look for a pullback, maybe 1 or 2 bars, and it's going to want to buy again. Now, there's sellers waiting here. Okay, so anybody who's stuck down here, if they sell the close, or anybody who sold the close of that bar, or maybe that bar. So I'm going to measure from here, because if you were a bear, you sold that bar, and you got continuation and completely failed. You got trapped there with a second leg. So you wait for a bear body. Say that bear body closed here. This is your break even. You can still get that break even, but it has to dump very fast, and I don't know if that's even the case. So I'm waiting for that bar to close. There's plenty of time for bears to sell and close it. Maybe test the breakout point, 62 high, okay? But if we take out the 62 high and close a bear body, chances are bears are going to get their break even. So if I measure here, I'm trying to be logical. Where would I sell? Right there is the close. I get a really nice continuation. Say they took out that 62 high and closed the bear body. Your break even is right there. Got that 62 high and close the bear body. Your break even is right there. But I exited out, bought here, made good money, because this is probably going to want to go higher. I waited for the break-even machines breaking even. I could have entered right there. I wasn't so sure. I wanted to see this taken out and come down and give us a really nice wedge, but that didn't work. And there's a wedge here and a failure. So this is support. Some machines bought there, but they already know that if they buy here, there's a chance the bears want to break even. So those bears will look to sell above these bars or at the high or maybe there. They're going to look to, enter again and get a break even. So this bar played that role, but then it closed bullish. As soon as it closed bullish, I said, that's fine. And it actually closed slightly higher than the close of 60. That's momentum right there. And the bears exiting out I got in right away. I hit buy market. I had a buy stop order right there also waiting. And I got in with that one as well. And just around here, before that midpoint, I exited. I scalped. It's going higher. We have no bear bars. What does that mean? So that was another attempt to break even. So they scaled in once. They scaled in twice. This is pain trade. And bulls know that, exploiting the whole situation. They're trying to get right there. Right there. There's sellers waiting here. What it's going to do is it could go there, come back down, and then finally, if they're scaling for the third time, I would not do that. But they can do that. They have big pockets. They can scale in even up here if they wanted to. But this is what we're getting right now. Beautiful bull leg. And it's trap bears first buy signal bar, but it is a terrible one, even though body is pushed up and no one really bought it. Okay, so I said wait for a second one coming in. I wanted to see a break of that and continuation down. Bulls had a different idea. So now we have a beautiful buy signal bar. You could have bought above it, but I wanted to wait for that break even, because when it starts to plunge, ATR is 10. It can plunge 10 points or 5 points. That would scare me. So instead, I waited for break even to be done and bought there, and I had a really good I think I ended up getting filled somewhere like way after the close, and I exited out around there. That was a really nice 15 point. So back to the triangle, like I said earlier, that this is basically where they want to test, and they probably want to actually test right here. 42 low, this is where they're trying to reach. But I'm going to take the entire area. So this is where the market is trying to reach now. And most likely they will reach there. So if you're still long, hold. Good reversal. And you can see is why it didn't break down. Powell came on board. And Powell can literally reverse the market. And he did. Okay. So not getting a breakdown on 56 should signal you that we may not move down here anymore. Good bull bar, break even happen, another bull bar, another bull. You could even bolt one tick above there. But a big wick above, when the bars are like this, I'll put a buy stop order. But when there's a huge wick, almost the size of the body, I'm going to put a buy stop there, but I'm going to buy right there. Okay, so I get in, and then it goes up. I get in again, so I'm in with 2 contracts. I'm going to scalp and leave a runner. Okay, so when I see that, see, buyers there, buy to close, they entered, buy stop order, big void, so it's probably looking for a measured move. You can take that. That would be your 1-to-1. They probably already got a 2-to-1. They're scalping. That's 2-to-1. Or say that is the body is breaking above, and that would be your 1-to-1. You would put your stop under 56. Maybe just give it a little bit of, that's it. Perfect 1-to-1. Okay, so that's why they're taking profit. Now, if you measure, say you're stuck here, you sold here. Now you're going to sell again. They're still selling. This is the 3rd time they might be scaling in. They scaled in here, couldn't get out. They might have scaled in again, somewhere at the 50% of this leg. They might be scaling in here, but again, they need to see a bear body. Now, why would they scale in here? That's because bulls got a measured move there from bar 60 high, or measured move, 2nd leg up, pull back, up. So it's a 2-legged move. And also, if you actually measure market move, just about 30 points and now more. Okay, so this was low, so I'm going to measure from here. Yeah, so market move 30 points. So they know that swing bulls will take profit because they're incrementing 10 points, 10 points, 10 points. But really the bull's actually trying to go up here. So I would not sell anything here. This market is trying to reach here. And look how the 40-point aligned there. So this is where the market is trying to go. It's pretty much the same here. We didn't have this. If we had that 2nd leg down, like say we took out that 56 and got down here, then I would have said any pullback would sell somewhere in the middle. We did not have that because we did not take out that low. So it became very bullish right away. Here is pullback. This one move underneath EMA because it's a one big bar. So it needs to test 50% of its gap range. And then the buyers showed up. But look, if FOMC started, there's a bear leg. Look where we ended up going, way above that bear flag. So this seems like where the market is trying to go. We are always in long. Why are we always in long? Well, look at the 63 and 64. I said there will be buyers waiting at the EMA, and is limit order long buys, and they were there at the EMA, below the EMA, above the EMA. They are all filled several times, in fact. And you have a big bar closing above EMA, follow through bar 64. Expect another leg or two up. I can't hold on to shorts if market is not giving me a breakdown of 56. I warned you, if you do sell, and if you're selling, you have a reason to put your stop here, because that body closed below that. And they did sell. In fact, two-legged move inside of that. The problem is, it just didn't break it. So if you didn't take profit and you see this reverse, you can't sit here and let them run your stop. You have to exit out somewhere, right? And then join the buyers. So now there's probably more measured move. So that's it. That is the measured move. So if market may continue. Now, why are we getting sellers here? Well, it's a 30 point. They took profit. If we do not get a bear bar closing on its low with bar 66, we're going to take out the bar 65 high, and we're going to keep going higher. The only problem here is that there are sellers here. Strong move down, breakdown, and a second leg down. So evidence says there are sellers waiting here. So you're getting the first reaction to that sell zone, but no one's going to sell against this. Bar 65 did not close even on its midpoint. I do not want to sell. There are sellers there. It's because they're still trying to break even. Now, if this bar takes out the 65, that's because break-even bears, maybe they're stuck here. They sold at close. They're still trying to get to the midpoint. So I'm going to readjust this measurement. So if I sell there, I originally sell 58. Okay, this is the midpoint. So that is the break-even price for bears. Can we come down to that level? Well, bears need to really take out the bar 65 low. Then yes, we would get a second leg down and we would meet that break-even. But in 1 minute and 10 seconds, if that bar closes bullish, that's going to be game over for bears. But if the bears close that bar, they're going to try to get a second leg into the lower 1/3 of bar 63. That's a buy zone. Why is it a buy zone? It's because it's a breakout follow through. So there are buyers here. Happens to be the break even. So we know that's an important area that the market may want to test. Okay, so it was a 30 point. I measured it. Basically, I was signaling you, this is where you need to take a profit. Yes, we can eventually get up here, but it's not going to be a clean move because you got a strong, market's going sideways, okay? And you got a strong sell. That's impulse. And then it goes down, right? So a second leg starts to go up, okay? This is evidence that sellers are waiting there. They're going to sell again. In fact, they could sell twice, actually. But if the second leg traps the bears, then we can break this high of 65 and continue into here, which is a 40 point, and that's where I'm interested. So if you're holding this, you're bullish. That is basically a flag. Okay, so it's a pennant, right? Or a triangle are pennants. And if we break this pennant, we're just going to go right there. So leg 1, pull back. Leg 2 is I am not selling this because I know bears are stuck. They're probably selling and getting stuck even more. We did not take out the 65 low. We now have a outside bar, inside bar, 65 and 66. Now we have another inside bar. It's a breakout mode. It's an inside. And we have a huge bull leg. No one in their right mind is going to want to sell against it. So everyone's buying the pullback. They want to get back up here. Well, basically there's a 2 legs there already. So up and down, pullback, maybe second leg. If this bar now closes like that, that could be a second leg trap. I don't know. You just have to wait for 67 to close. It's an inside bar at the moment. I'm not going to sell against it because we have a bunch of gaps, and even if it comes down, I'm not stuck. That would give me a great low price opportunity to buy, average, and then go for another leg up. So if I'm still bullish and I'm still in long trades, and this is where I think the market is going to go, if market gives you an opportunity of pullback, you buy again, right there. Right, I understand that, but this is basically a two-leg right there. Right, so comes down, pulls back, comes down. That's a two-leg. If you can actually go to a 2-minute chart. Do you see the two-leg now? Leg one, pull back, leg two, trap. Now, can it still sell? Oh yeah, because it didn't really take out. This bar, bull bar, is basically an inside bar, inside of 66, inside of 65. It technically did not take out the 66 high. So this could be still the pullback, and we could still take, get another leg down. That's what I'm saying. If it does come down, you're going to have to buy again. But if it takes out one tick above 66, that means bulls are buying and they trap the bears. It's just going to go and take out the 65 high. So that's why it's struggling here. It's stuck in there. But technically, there's already a two legs there. Now, see, it didn't take out the 66 high. It could be just a pullback, and we could get another leg down. Market is still scrambling to get a break even. Everybody sold the close of 65. Technically, they're still trying to get down to here. There might be even sellers from here that break even could be here. But I don't know. I'm not stuck. So it's good luck, bears. Because if this bar suddenly closes bullish, those bears will exit out, and we're going to get an accelerated move up so fast. Okay? Because they already sold here. They sold here. This is their third and final, whatever, the scale in. And if they finally realize we can't do this anymore, this is too much, and we take out that high, we're going to end up here very fast. This is why it's going up and down, up and down. It's observing all those sell orders. That means bulls are not letting go. Bulls are like, forget this. We got this. We're going to buy every order you put in the market. We are not going to let you bring this market down. So that they're just observing all those sell orders. And when there are no more sellers in the market, it could go high very quickly. So it did take out the bar 66 high. So you can see it's a pullback and a leg. So now you have a triangle breakout bulls are trying to get. That's why I said, let's say, good luck, bears. It's trying to get to the 40 point, about 27, 28 area. Yeah, 27, 28 area. Let's see if they can make it. I'd like to see acceleration. We are testing these apex of this triangle we broke, but really this is where market is trying to go. Okay, so because it's a really bad buy signal bar, so they want to test the low or the high of bar 42. So they're rushing to get back to it. Wow. Something, huh? Very impressive. Really, who's impressing us? That would be Powell. I have seen Powell do this. When I was first trying to trade FOMC, I didn't know about nothing. I blew up an account, a really nice size account, in this move like this. Then I learned very quickly from these years ago. from the Brooks course that is support and resistance is very important. Buy zones and sell zones. Squeeze your chart and look for those gap closes and look for those qualifying areas and see if there is any exhaustion and failure. Then it's going to go right back up. See, I don't blow accounts anymore. I triple them, quadruple them. That's what you're supposed to do. All right, so bears exit out there, and we ended up getting to that target, but also we still have a little bit more room to the upside. So this is probably going to drift a little bit longer to my measured move target and a 40 point right there. 42 is where they might actually start to take, bar 42, they might start to take profit. So if you want to pay yourself here, that will be ideal because it will come down. And it could come down 10 points very quickly. ATR is almost 11 now. Okay. We reached the measured move and we reached the 40 point. It's beautiful. Did any of you make money or lost money? How are you guys doing over there? Excellent. Well, Ari, Baba, how would you, I think that was the question you asked, is in time, you do the same mistake over and over and over, your body, your brain eventually will give in and say, you know what, I can't do this mistake anymore. I'm done. You know, I'm just going to do opposite of what I've been doing that makes me, you know, made me lose money. I'm going to do the opposite, right? But that's not a good way of trading, or that is not a good way of becoming a trader. Be smart about it. Take the course. If you have taken the course and forgotten everything, take the course again, okay? And start watching Al's FOMC sessions, or watch Al's recorded sessions, watch Brad's sessions, watch my sessions. And you're going to, okay, so learn what is a failure. You see that failure, this becomes a vacuum, okay? This is a bad price action, okay? So anything that looks like this will get continuation, but it is a bad price action, okay? So that means market is going to want to correct that. That means they're going to fill that gap. If they find any support after trapping the bears, and suddenly you start to get 3 bull bars. When did I say 3 bull bars, the momentum? When the bulls start to get that and the bears are not getting their break evens clean enough, meaning not deep pullbacks, those deep pullbacks are not happening. That's because market is rushing to correct this. Correcting any kind of bad price action creates suction, okay? So, or magnetization, I'm running out of words. Or we could say, okay, so we call it a vacuum, okay, effect. So we're going right up there. So we're going to test that key area, but this is it. This is, what did I say about the bar 42? We're going to test, probably try to get to the high of it. And then profit taking. Are we taking a profit here? Now you tell me if this is not a 10-point sell. Yikes. Almost 10. Look. I mean, I warned you about that 10-point drop. So you really needed to take profit somewhere inside of this key level. Remember my 3 diamonds? The other day I posted a chart, and this is what I did. I'm going to delete everything. So, you know what I'm doing here. All I do, find areas, area of interest. Okay, there's one there. Actually, it was right here for the bulls. Put a diamond there in the middle. Those are limit order buys. Okay, so here's what I was doing. I put a buy order here, bar 30 activated. I put a buy order there in the middle, average price. I put a buy order there. Look, is all 3 activated, you make money. Now there's another one, right? So look, is where did the sellers show up? Breakdown, but look at that sideways price action. Let me delete that and do it in a clean way. So there's a tight trading range. In fact, you could take the whole thing. This is the tight trading range. So I would put a buy order there, buy order in the middle, buy order in there. So you can sell, not buy. So you can put sell orders if you're buying in. Okay, so you would actually take profit, or you would exit out here and then you start to put limit order sells because they sold there. That's your limit order zone. Sellers are waiting. You look at the ATR, grab a 5-point, half the ATR, leave the other runner, not just a 5-point, but twice the ATR. So twice the ATR is 20. So you're trying to make additional 10 and 20 point. So you scalp here, your stops there. If we take out, we're going to come down and test that high. And we did. If we close that gap, you move that stop to the break even, your runner is running. Okay, that's what you do. I actually sold there, so I made money. I'm looking for a test of 65 high. There were obviously sellers there, scaled in. They sold again here, so now they're trying to reach there. Let's see if, yeah, no, we did not. There's a 1-tick failure. Nope, should get that. Okay, we just tested it. Now there will be probably buyers wanting to buy the close of that bear bar. See, it's still coming down. That's now a lot more than 10 points, isn't it? So that's 11. That's 12, right? Eventually it was 10. So 1.5, that will be around what, 14, 15. And now they're trying to get 2 times the ATR, which is about 22 points. Can it come down here? I don't know. Probably not. Because there will be probably buyers wanting to buy the close of that bar right away. The goal was to test this. It's just overreaching because ATR is too much. Chances are there are buyers wanting to buy and go right back up again. But if it takes out the low of 68, I don't know if I would sell because there's a tight trading range here, so there are buyers waiting here. So imagine those little diamonds. There are buyers wanting to buy here, there, and there. As it goes up, they make money. There's also a wedge, is 1, 2, and 3. So the market is still trying to get down here. So let's measure again. If you sold here and you sold inside somewhere, there's a chance this is where the market is rushing to get here. Those bears finally can exit out. Now, you can also do this. How much did the market sell? These bears are trying to make twice the ATR, which they're going to probably. So just around here, average 20 points. So it's trying to get to the 20 point. Okay, that was a beautiful sell. I'm going to take profit right there because that's the break-even bears. They finally got their break-even. They waited all the way here because they knew market was going there, 40 points, and a big leg and a second leg up, maybe even leg 1 pullback, leg 2 pullback, 3. So leg 3 started around here. They're trying to test these low, 66, 65, 64, but the buyer's waiting. I'm done. I'm out. I don't care if it comes down. I am out here because it's a 20 point. It's going to bounce, but I'm out. So you see how. Now, where are the buyers? Is possibly, I'm going to measure here. Well, they kind of broke this level now. I probably wouldn't, nothing I could do here. If I bought here, say I didn't sell up here, and I see this area, and I put buy orders, and it's going against me, 1 or 2, maybe activate it. But the problem is, why would you not buy? Look at this bar. It took out that high, and then now it's coming down here. It's because it's trying to reach this area. So the buyers are probably right here instead. Can it go further down? Well, it can. I don't know. But I'm stuck here, right? Say I bought in this area because it was a good area. And I didn't expect this to come down all the way. Maybe with a bounce here, but the ATR is too big. So what am I going to buy again? Right there. Now I would buy. And if I bought here, as it goes up, I break even and I start making money. So why there? Look at that, 1, 2, 3. Actually, I learned this from Al Brooks. You see something like that, you know market is going to come there. And then right here, there's a little gap. And I'm going to take all of those. This is where I got stuck, right? So this is the buy zone. And I originally bought somewhere here. Say I'm just going to average it, right? And I buy again somewhere in the middle. This was my break even. So I can fix that quickly because that balance zone did not help. It just did not hold, so it just came down. I'm going to buy again because this area is a gap. There are probably buyers waiting, and they gave me a break even, so which is right there, which was fine. So now this is the bears. They had a break even and they made a little bit of money there. What else can they do? Can we actually sell and come all the way down to this area? Right there, or maybe even test the 58 because they sold the 58 close, maybe even sold the 59 close. Can we come all the way down here? Bad sell signal bars, reversed. Yeah, market is still trying to get down to that high and that high, but they're going to have to do a great job and close a bear bar, okay, really strong all the way down here, maybe even underneath. Then it could bounce a little bit, but it could sell once again. I wouldn't do it. I'm not going to sell because this gap is strong, and many people bought here because it was okay to buy limit orders, but it overshot. So those people are buying here, and they're still trying to get back up to the 68. Okay, so 68 low or 68 open. I'd be careful there, selling. It's also a 20-point move. Even if you calculate with the ATR, bears made money twice as much of ATR, so they will take profit. If the bar closes extremely low, okay, then it might actually continue is maybe another leg down, but I have all the reasons why this may not sell. Okay, there are some questions. Sorry about that. It's on a different monitor, so let me have this in. Once something has been spilled, it is usually not worth fixing. Oh, sorry. So you're talking about my. Well, I did fix it. Don't say that. I mean, I'm hoping this computer will last another 10 years. But my fan is not working. That's something because it is hot. I couldn't even touch it. Hold on, let me see. Yeah, I think my fan completely died. Oh no, it is working. All right, so the fan is working. I mean, against all odds. I still have to buy a new computer. But hopefully is one thing that I learned from this ordeal, if not anything, when you give this computer to someone to fix it, and if your Ninja Trader does not use a password, it actually launches with a double click. It might be a problem because if you leave your computer at a place where you want them to fix and log in and do all the work, they can easily access your account. So always have a password protected, or call your broker and have them reset your password so they cannot actually open up the application and do things and look around. Okay, so there's that funded account thing. Yeah. Anyhow, so I did say that they're probably going to bounce because there's stuck buyers here. They thought that this area was great, so they bought. They bought underneath, and now they're getting their break even and might be even making money. So good job there. Yeah, I'm definitely going to check out those. I made a note. Thank you, guys. I'm making a list of, I'm going to get a really nice desktop and a laptop to go along with it. Yeah. Okay, so you can see that's why I said I would not sell this. One thing, just take profit and be done. All right, so let's see. Have I missed any questions? I'll open up the go-to meeting also box, but I'm just looking at the desktop right now. A desktop Discord, I mean. Okay, so looks like you guys were doing amazing. Oh my goodness, look at those. Why? I guess when you were a stock trader, I would kind of understand this, but there's no way I can trade like that. I mean, I have several monitors in front of me. I have 1, 2, 3 large monitors, and a 2 desktop. This is even too much for me. I lose control. I cannot do that. No way. All right. You know what? I'm going to open up the go-to meeting question box if you guys are interested. Asking questions there. Go ahead and ask, but just make the questions short, please. Not like 2 parts and 3 parts. It's very difficult when live trading is going, and it's going pretty fast. Look at this. You made, and this was pretty strong down. So I would measure here. This is where the buyers showed up, and that's a 10-point right there. But it could continue to go higher, and it could go to 15-point. It might even go higher. I don't know. It probably not. There are probably sellers right there at the upper 1/3 of bar 69. There's sellers waiting. Okay, so maybe from the mid-level, but I think they're gonna reach the upper 1/3. So the target is 23.75 to 24. I'm sorry, 23.50 to 24.50. 23.50 to 24.50. It's trying to reach, but the seller's waiting there. I noticed that the bar 56 is a measured move of the bear body in bar 55. Is a measured move in the next bar common with impulse bars? And then 51, let's see, 56. Yeah, I mean, it's a huge leg down. You know it's going to get continuation. You could have just measured that, and that would have been your, okay, so I do that too. I also do several different ways. So there is a structure there, and it broke the structure. So that was my first measured move. Then you get this. There's another way to measure bar gappings, right? There are 3 bars. Hold on. Is 3 bars put there. That's my measured move. See what I did there? When you have 3 bear bars, 1, 2, 3, and there's a huge gap, and a 3rd bar closes really strong like that. I've shown you guys this before. Hold on, that's not what I'm trying to do. We're not sim trading here. Here we go. That's 1, 54, 55, and 56. From the 3rd bar's high to the 1st bar's high, you're measuring that gap. That's your measured move. Well, we came very close to it, but the most accurate one was here. Immediate sell to close. You put it there, this bar. Then you're measuring the body gap, and that's, hold on. That's not how you do it. That's how you do it. That's your measured move right there. Okay, so next question. How to improve decision making? Oh, wait. Did I answer your question, by the way, Mike? I hope I did. Is that what you were asking? Oh, you're asking me if it's common. Well, depending on the news, we're in a news event. News event, yes, especially if you have nearby some buy zone lurking around. It's probably trying to reach there before reversing, which I had. Remember, I had this area boxed, okay, and I said this is actually a buy zone, area of interest, tight trading range before it broke out. Chances are buyers waiting there. However, we still have to expect bears to drift down. I had a much better zone down here. But I said, look for 56 to be taken out. Bears did not take out the 56. That was a first buy signal, which was terrible. No one's going to buy that. They tried to buy the close of it, but they couldn't close a strong bull bar. If this bar, inside bar, was a one big bull bar, oh yeah, there would be buyers there. But again, who's going to buy against this leg? That's kind of big no-no. So expect the leg down. Then you get a second buy signal bar. Okay, so I wanted to see if there are any sellers here because I was looking for a double top. We got that double top, and it ended up selling only to take out some of the stock bears, which I calculated and showed you, but then it closed bullish. Then you got a third bull bar. I said, that's it. This is momentum. Buy. So I bought here. I bought there. I kept buying. I even bought that. I'm sorry. I actually exited out here. I didn't buy that. I bought here. I exited out a little bit above the EMA. Then it came down. You could buy again. I said, pull back. They're going to buy it. And I showed you a bunch of examples from the encyclopedia. So commonality, it's if the ATR is too big, you got huge bear bars, then I would immediately look for a 3 bear bars or 3 bull bars if I'm looking to go long. 3 bear bars, okay, and there's a huge gap from the high to that high. This is where my stop goes. This is my entry, and I'm looking for a measured move to the downside, and they just got it right there, and it just reversed. Yeah, you might get it if there are good strong gaps and a strong closes. You're gonna get that. Even if it's a bunch of inside bars, you will get that measured move. How to improve decision-making process for trading. Focus on the closes and failures. Okay, when you see a strong bear body like this, right? So first of all, let me step back a little bit. How would you improve? 2 ways to improve. We'll learn price action and pattern recognition. Pattern recognition is a #1 way of finding direction in the market, whether it's a micro market or major, okay, structural markets. Like here, look at this, right? I saw this, and I said before even, okay, we were still looking at how to trade the open. What did I say? I said this is a bear flag. It's gonna sell. So it struggled here, but it made a double top right there, and it closed the bear bar. And I said FOMC bars are gonna sell. So this is to the downside. So I'm right there recognizing the pattern, and I'm making a direction with it and saying that it's to the downside, not to the upside. So I'm going to sell this. And I sold market, right? Well, I didn't sell. But I told you guys to sell. I was too chicken to get in because of the computer issues. But if I weren't talking to you and I didn't have any computer issues, this is where I would sell with market. But I kept telling you, sell this, sell this. Then somebody asked, is this sell the close, STC? Yes. I said, that's sell the close. Sell it. So it keeps going down, right? Now, we took out that low, which is a breakout. But the follow through, we also got a follow through. I said, if you put your stop now, instead of here or mid, maybe up here, it's still going down. But I said, pay attention. If we can take that 56 with a bear body, you can then put your stop here. But we did not take that out. So now they're coming to get your stop. They took out the stop. Now you have a measured move, right? So when we talk about #1, pattern recognition. #2, how the bars are closing and opening. Recognize that if we are in a stop order market or if we are in a limit order market. Once you determine and do the differentiation between stop order from limit order market, you will trade the right way. You will never buy the close or sell the close in a limit order market. Instead, you're going to bet against it, okay? Like here, market was betting against the stop order. So they were selling the bull closes, they were buying the bear closes until they got a breakout, okay? So that's what you do. 3 is measured move. If there's a legitimate, okay, stop area, okay, and they're taking out that stop, which I said the stops would be here, that gives you a measured move target. Okay, so learn how to measure. Like, for example, I don't like to measure is wicks. I like to see, actually, like this would not be my measured move target because it's a wick. Wick is not a breakout. I'm looking for a body. Right there. Look at that. That's your measured move. So learn how to measure right. Now is, what's his name? I'm just joking. I did not have lunch. I am hungry. And normally this hour I would drink another coffee, but I will never put a coffee on this table ever again on this desk. So my brain is completely shrunk. I'm trying to say Tim Stout. So watch Tim Stout. He measures like crazy. He pulls out, levels out of thin air, but he really doesn't do that. He just measures fast. Tell him to slow down if you don't see it. I can see what he's doing, but you may not, okay? So just tell him. He'll do it because he's so smart and his brain is working so fast. He's been looking at the charts for so long. He'll show you exactly how he's measuring. Have him do it slowly and keep doing it on your own chart. It'll stick with you. And when you measure it right, you're going to get those targets all the time. So it's very important, okay? I should get that. You're right. And even with that, I would kill a computer. Probably I would spill more, Andrew. But anyhow, next question. Would you call this a TR, trading range? Is it limit order? What is BS? B/S or B/small s and a large s? I'm sorry, what is that? Buy to close? What are you trying to say there? You lost me there. Oh, buy sell. Okay. Would you call this a trading range? Is it limit order buy sell or buy sell to close? Well, big down, big up. Oh yeah. I mean, I already said that we're in a trading range. Okay, so let me get rid of that. When this was all happening, I said, watch out. This is actually a trading range, but it's also is possibly a expanding triangle. Right, so if you actually, maybe like that, maybe like this. So we didn't reach there, remember? And what did I say? I said, we're probably going to get to the apex of this triangle. Now look what's happening here. Trading ranges can be defined as triangles, expanding triangles. Okay, so what should we call them? Megaphones, whatever. They are all trading ranges. So your assessment is correct. Okay, so this is basically, okay, a trading range. But big up, big down, or big down, big up also creates a trading range. All right, so we're right at the apex of that trading range or the mid-range, whatever. You can also measure this. Here's how I would measure my trading range. Here's how I would do it. I'm going to get rid of this. So I'm already seeing this. Right, there's a trading range already there. Okay, so I'm going to take the bodies and I'm going to exclude the wicks. So just about, right? So what we've done here is that we extended amount of the breakout is cloned down. Look at that, beautiful. Now it's going right back to it. So we're back into the balance zone. But one thing that is happening here, we are above the 50%, so we're bullish. Okay, so, but as long as we stay here, market could continue to go higher. Now, before I started all these question and answer session, by the way, do we have a recap session? I'm not sure if Brad or anybody else actually, if they haven't, I can do the recap. So I said upper 1/3 of bar 69, sellers are waiting. That is the upper 1/3. Okay, so here we go. That's the first touch. We might need to test second time before we actually swing short this. Okay, so there's a chance that we're going to go right back up again. Okay, Yeah, I mean, we are right now stuck in this. There's also a trading, triangle there. So we might need to break above. We need to test this area. Probably sellers waiting there again. Or we're just going to go sideways. What else is there? Well, that was the measured move. However, could this be a swing long? Well, we took out those stops. Now we're back. Okay, 50%. Could that be the measured move? Oh, yes. Market could go higher. In fact, tomorrow, if today ends in about 23 minutes, okay, somewhere here is tomorrow, chances are we're going to go higher to that measured move. It's possible that we would. Okay, so, but we just need to take out that high. So we get continuation. Remember, there's the third part, which is the reaction to the FOMC the next day. So your question was, is it limit orders? Right now, you're in a limit order. So you had a breakout, but no follow-through, failed follow-through. Anybody who bought the close of that bar, they're going to scale in underneath. They're probably going to scale in maybe here, and then they're going to make money. So if you are a limit order bull, forget what I said. If you are a bull, okay, is stop order bull, buy the close bull, breakout bull, because you see a breakout and you want continuation, and you bolt that bar, immediately disappointed. What are you going to do? You're going to scale in right at the 68 low, okay? So, but this gets continuation. So now you're going to get, okay, you're going to probably buy, you're looking for another area to scale in. Where could that be? Maybe a breakout point right there. Maybe underneath here. Either or, you got in. Where's your break even? Well, let's do that. Say you bought right at the breakout level, which they breached below, so they were buyers. That will be your break even. So the bar 71 and 72 gave you that break even. Or you bought the close of that bar 70s, which I said is don't sell anymore. This is going to go up because people are stuck. And look what happened there. That was your break even. Or is you bought the close the last minute, you finally made a decision because you saw a legitimate bar, which is bar 71 close. Yes, many retail traders will wait for that bar, a bull bar to close. Even they got their break even, and then they all exited down or just came down. But we are now in a sideways market, which is a limit order market. Therefore, machines will bet against anything that they see strongly closing bullish and strongly closing bearish. They bought that bar, they bought that close, they sold that close. There's nothing there. So, it all started here. It's signaling you that it's going to go into a limit order market right there. Okay, it's if a bar like 68 disappointed bulls and suddenly it actually sells and it closes a huge bear bar, that's a problem, right? Stop order market turned into a limit order market. So it's going to go sideways for a while. So that's how you would read it. Okay, so there's an end of day is reviewed by Brad Wolf. So I'll end the session a couple of minutes before so you guys can go join him. Okay. It's like, it feels like I'm handing my children over to my divorced husband. Here, our time is over. The weekend is over. Children, go to your daddy. I'm kidding. We got to have fun. Okay, let's see. What's the next one? I had an impulse, regretful, bought the close 64 and realized bad risk reward. And that was panicking. If 67 high was 64 by the close. Bulls exit into lip bears. Oh, I see what you mean there. That's what you're trying to say. 67. I mean, yeah, but that's a flag. So if you actually bought one tick above 67 is, it did what it did, right? So there's a trading range projected to upside. That's a 1-to-1 target. So you did great there if you bought above it. Or if you, see, I wouldn't buy the close because it's still going sideways. They could still sell. So I'd rather to put a buy stop order and wait to get filled. If market is bullish and breaking out, it's going to sweep me away and then give me a 1-to-1 target, which is measured move. Oh, there's a question here. Sorry about that. High was 64. So the question is, it's break even, real possible again. If that happens, should I hold it? I think I answered this question, haven't I? Did I give you my answer there? Because I was kind of explaining how to get that break even. I don't know if you heard me. So if you bought the 64. Oh, you're talking about 64. Sorry. Okay, so 64, you bought the 64, and then it just came down. Where would you buy again? There's a breakout test, right? So, or 50% of this bar. It's a body gap. So they bought above, 1 point above 62. They entered. So you got to break even right there. If you bought the 64, and if you say a 1 point above 62, or here's how I would do. I'm going to show you exactly how I would do. Okay, so you bought the 64, disappointed. You got a breakout bar and a follow through. Limit order buyers are waiting at the low of 64. You can put a buy there, you could put buy there, or 50%, whatever. You can enter. But if there's a body gap bar like this, I measure that bar, or I measure the entire thing. Okay, so breakout and follow through. And I look to see where I can put my buy orders. Here's where I would do the buy orders. So I'm measuring the breakout bar and the follow through bar and disappointment. So that's 33% pullback, 50% pullback, and that's a 66% pullback. Okay, so I measure that range. You can put one there, you can put one there. As it bounces, you make money. Okay, so basically I am measuring the pullbacks, and I'm putting, well, it says 66, but it's really 33. It's just the way that I drew it. You can draw it like this. Oh, well, let me do this again. That's it right there. It's a 33% pullback. You can put a buy order there. You can put a buy order at the 50%, scale in, and you will make money. Okay, so that's how you would do. Oh, good. I answered your question. That's good. How do you join Brad's session? There's a link that Brad puts under All Things Trading or ES Analysis Read Only, Discord, or go to YouTube and you'll see a live stream open up. You can watch from there. Albert's YouTube channel. Okay, I'll take one. No, there's more time here. I took bar 52 as a second entry long in context of 2 legs down, 32 and 46. Bar 52. Now let me delete this. There's a kind of a head and shoulders going on here. Bar 52. Second entry long. Well, so you thought this was first entry long and that was second entry long? Not necessarily. We made a new low and we're underneath the EMA after selling with consecutive four bars like that. There's actually a breakout test area, which is right there. okay? Even if you bought this above 52, it actually gave you something there. I don't know how much, but say you bought the close or 1 tick above. It gave you 1 point, an extra ticks, okay, to exit out of your, or scalp. When you see something like this, taking out that structure, okay, so it's coming down strong. It's a minor pullback. It's looking for a double top bear flag. It's not a good idea buying into that, okay, so it's not, and we just took out that low once again. So it's signaling you that this is actually an expanding triangle, is a form of a bear flag. It's looking for a pullback sell. It's looking for a pullback sell, okay, at the prior highs. So they're trying to trap you for going long. For the rest of the question here, okay, on bar 54 setup failed and became a bar buyer below EMA. Yes, this was bar buyer. So I look for several ups and downs before I do anything, which is also technically a flag channel trap below EMA. So I exited. Okay, good job. That's good. I missed the subsequent bar 55 sell-off and hesitated to sell at market too long. Well, that's because you couldn't make a quick decision when you saw this bar. I mean, you see this bar already coming down. Remember what I said? We're selling this. We're going to at least test the EMA. And I even said on the hourly chart is at the minimum, we're going to come down to the EMA. I wanted to see actually bears bring us down to here, but we couldn't do that. Now, we could do that now. We could get that second leg down actually because we have a head and shoulders pattern on the hourly. So we could sell here, okay? So they could sell all the way down here, but they're going to have to take this out. I don't think there's enough time left. I don't think in 10 minutes we'll be coming down to the 50 EMA. But you see something like this, look around to see where is the next legit stop. I'm sorry, support, right? So, or look left. Where was the last bullish leg starting point? It will at least try to get there. Okay, so, and it did. And it broke that because it's trying to get to this support. Now, it broke that because we have a measured move target to the downside. It's trying to get down to that target. And then I found even much stronger, okay, support. We're going to test that support, I said. So all you have to do, train your hand to be able to quickly click on the sell market, okay? So I have to do sell market, okay? So that's what you're going to do. Obviously, it's not the good place to sell right now, but I'm just trying to show you. Learn to use those buttons, sell market. And then what you would do, you grab a couple of points, look at the ATR, try to grab half that ATR scalp and leave that runner, okay? That's what you have to do. So you see something like this, it's going to get at least a leg or two down. It's a big bar. It's going to drift down. So you're going to have to learn to sell with market. It is a bad price action, impulsive bar. It's going to get a leg or two until it finds support, okay? So you have a potential of making at the minimum half the ATR, okay? Goes on. All right, so the next question. Would you just get out at break even? Oh, when you're scaling in for break even, would you get out of break even price, hold for potential move in your direction? If I'm committed to take break even, oh yeah, I'm breaking even for sure. I can always reassess the situation, see where that break even bar closes and how it closes. Then I might actually enter. For example, I've done this exercise before, and I have a template. Right, so you sold it here, okay, and then this happened. right there at the 40%, you sell again, or you sell here. Okay, so you didn't get your break even, but it came so close to the break even, right? That's not how you do it. If you sell the close of a bear bar, now you finally got your break even. How would you expect continuation? They're for sure taking profit here. They're exiting out. Okay, what would you do? You wait for bear bar to close below this break even with a bear body. Then they're probably going to sell and get down to here where they originally sold. Okay, so this would be your target. It's already, it calculates it automatically. So or you sold here. That was the 40 point. Remember, I measured from here and I said that's a 40 point. Or even if you measured from here, 40 point would have been here, but that wasn't a good measurement because up until here with the bar 60, that's bearish move. Bulls started to show up here. So I know when market moves 20 points, that's half a trend. 40 points is a full trend. And I said bar 42 is what we're going to test because it was at that time leg 1, leg 2. So the person who asked the earlier question, I don't want to say the name, but hold on. It starts with J. Okay. So the person who actually bought here and got stuck with the second entry long, they did the same thing here, but that was also a bear flag. But doesn't matter. This is a much better buy signal than this one. Okay. So, but we know the market is trying to go there, and it went there. It made a 40 point, and it needs to take profit. This is where the bears are waiting to sell because they know bulls are going to take profit. Say you put a limit order there and you sold the close of that bull bar. Now, where is your break even? Your break even is right there. Bar 70 is actually sold into it. But what did I say about buyers showing up here? First of all, you're selling into this gap. So context, important. You know these bears are desperate, context number 2, because they have been scaling in and they're desperate to get out because they know it's a big down, big up, probably the 50% of this range, buyers are waiting. Number 3, bar 70 body did not close below, so it's also signaling you it ain't going to come down further. Probably buyers are going to buy the close of that bar or here, and it's going to go up. And look where it ended up going. Right back to the upper 1/3 of this enormous bear bar, which I said sellers are waiting. So instead of, if you didn't buy this, you would wait there and you would have sold, or you could have sold the close and you would have made money. Either or. So, but if this bar 70 were able to close underneath or below its midpoint, strong bar, probably the pullback will be sold and we would end up coming down probably the 62 close or somewhere here. So that would have gotten some continuation, or we might have even come all the way down. I said bar 58 high, bar 59 high. Those are the original bars that they actually sold and got stuck. Remember, I talked about it, but I said right around that time, here's my reasoning. There's a gap here, and it's a body gap, very strong. We are not going to sell. So I said, if you are breaking even, break even and exit out because this is going to bounce hard. I did say that, and it did go up. So that's how you would do. Context first, then the way the bars are opening and closing, and where the break-even level. If it's not breached with a bear bar, okay, so that means it may not get continuation. And same for the bulls. If the bulls is breaking even, say, here, let's do this, right? So you are a bull, and you got stuck up here. You bought. You're going to have to buy down here, right? So what are you going to do? You're stuck here. You're not going to buy the close of that bar. That bar is going to get continuation. But say you bought underneath 2 bars underneath 67, right? So your break even is right there. But you originally entered here. You want market to go here. does market show you that they're closing a bull bar above the break-even level? No. So do you have an option to go long or hold on to your other contract? No. Did they close a bear bar? Yes. That means they're trying to come back down further. So you have no business holding on to that break-even, hoping to get up here. Market is showing you that ain't going to happen. All right, guys, there's 2 minutes left. I know I'm skipping questions, but hold on. Maybe I could get this one too. Oh, one last question. Do you trail stops when sell? Oh, yeah, all the time. In fact, if the certain highs and lows, say I'm selling, right? I'm selling. If any bear bar taking out that, with a bear bar, I'm already below the break even. So say my break even, say I entered there and bear bar closed below the 70. Immediately I put my stop here because this is going to keep going down, and I trail more as the lows are taken out. Oh yeah, I do. I do break even stops all the time. All right, so I answered all the questions. I apologize if I missed it or I didn't answer it accordingly, but you guys have to go meet Brad so he can do the end of day trading. Okay, end of day recap. And I'll see you guys tomorrow morning. Bye, everyone.